economy by 7.4% this year, and accordingly, we are looking forward for the big growth in the succeeding years as well as. And this budget being announced by the Honorable Finance Minister when we had entered into an multiple free trade agreement with many other countries, and especially with the European Union. And today, when we are deliberating on this issue, we are very thrilled to announce that the India and the US has also announced the free trade agreement yesterday night only. So with the countries, many of the countries, we are entering into the free trade agreement, and the economy, the way we are into, our economy push and the looking bright future of the economy is the future of the India. Friends, before I introduce to my esteemed panel, I just take few minutes more just to let you know, in the changed geopolitical scenario, this budget been announced by the Honorable Finance Minister. World order is changing fast, and challenges equally been changed. There are multiple challenges to the economy of the world and to our economy as well. As in the last year itself, our government has given a big push to the semiconductor economy, which is the most required industry for the digital and AI technology. So equally, the special mission been announced for the rare earth mineral for our country. Friends, the tax reforms in the manufacturing sector are multiple. Those will be deliberated by our esteemed speaker in the time to come. Particularly to the MSME, is something like what we are looking for, because MSME is the backbone of any developed economy. And so as we are thriving to be a developed economy, the MSME is the one thing which we are spotting. The MSME is the thirst area. Accordingly, the service sector is contributing large into the growth of the economy, and contributing large in the GDP growth also. So the push to the service sector is also there. By virtue of this, many of the change has changed. We must have noticed there is the large contribution to the defense, is the need of the hour. So equally, friends, I'll just say a few things. This budget is special for our professional, because we professional are understanding this budget just from the taxation point of view, because the economy turns out ultimately generates taxes, and we are the one who looks after the collection of the taxes and the right collection of the taxes for the country. As far as this particular budget is concerned, friends, there are 128 amendments in the direct taxes. I mean, now this precise, before I deliberate further, I'll just let you know the assessment year. This is the upcoming 26-27 will be the assessment year, as well as is the tax year as well as. So for the finance for the Income Tax Act 1961, there are 26 amendments, and for the Finance Act 2020, Income Tax Act 2025, there are 102 amendments. We all know that Income Tax Act 2025 will be effective from 1st April 2026. So as far as the indirect tax is concerned, there are few amendments, because already lot of amendments been made by the 56 GST Council, and now to give an effect to the legislation effect to those amendments, a few of the amendments, the customs amendments are 7. Then the tariffs, there are certain changes in the custom tariff by 1 amendment. GST, there are the 4 amendment, and IGST, there is a 1. Friends, before I hand over my proceedings to my esteemed speaker and introduce to my esteemed speaker who are already with us, friends, I just request one thing, that this being a special session, this being a special meeting, we will be taking question answer session only through the chat boxes. We have the chat box with us, and you can push your question in the chat box, and we definitely will love to take the question to you, but only at the end of the deliberation. So you should need to have a patience so that the continuity of the speaker, because the speaker needs some rhythm to continue with the deliberation. So friends, will request to you all of you, if you have any query comes in between, kindly concentrate only. I mean, just put your query in the chat box only, and we'll take definitely, if the time permits also, we'll take the personal query also if the time permits. So having said so, friends, now I take this privilege to introduce to my esteemed speaker. First, it is CA Ved Jain ji, our past president ICAI, is with us, and I welcome you, sir. I mean, I am quite delighted to see you on this platform and deliberate on the direct taxes and other economic effect as far as the finance budget is concerned. And also I welcome CA Ashok Batra ji, who is the person who is the encyclopedia for the indirect taxes, who will take us to the indirect taxes first. And I welcome to CA Gaurav Gupta ji also. I now welcome first to the CA Ashok Batra ji. Please, sir, I request you to kindly take us to the course of the amendment been made out there through this finance bill 2026, and I request you to please take over the proceeding from here. Shri C. Ashok Batra ji, please, sir. Batra ji, sir, please. Unmute, sir. Unmute yourself, sir, please. Yeah, please. Sir. Please go ahead, sir. आपने mute किया दोबारा से. Please unmute, sir. Yeah, welcome, sir.
Good afternoon to all, and I wish everybody a good afternoon.
Yeah, please, sir. You're audible, sir.
Yeah. I'm looking at certain faces which I was dying to see rather. Chaudhary Saab is there, Ved Jain is there, Ved Jain is there, everybody is there. So without wasting any time, we all know, so far as GST is concerned, there are huge limitations on the union. They cannot bring out any change which is in the domain of GST Council. So whatever GST Council does, to implement those changes only, they bring out the changes in the statutory provision. Otherwise, whenever delegated legislation is there, they always issue notification in time. I would like to just recall you 56th GST Council meeting, wherein certain promises were made, but that required amendment in various sections. So all those proposals have been introduced in this finance bill. Barring that, they can't do anything. And we all know that so far as GST is concerned, whatever recommendations of the GST Council remain unimplemented, so they are being introduced now. First and the most important change is with regard to the definition, change in the definition of intermediary by amending section 13 subclause 8 of IGST Act. So in the case of intermediary, which includes all commission agents who are procuring business for the companies and tour operators, etc., they were falling under the definition of intermediary, and their place of supply was location of the supplier. So that means in the case of intermediary like tour operator or commission agent, etc., they can never export their services in spite of the fact they were earning foreign exchange. So there was a huge demand and a lot of litigation was there on the concept of intermediary, because intermediary is one who arrange or facilitate the supply of goods and the principal supply is being made by other persons. So three parties need to be involved and these services are being provided as an agent. So there were a lot more litigation on this, whether I am providing services on principal to principal basis or as an agent and falling in the definition of intermediary. Now that dispute is being put to an end, and it is being stated that in the case of intermediary, the place of supply shall be the place of the recipient. That means the general rule, that is section 13 subclause 2. As a result of which, now all those buying agent and selling agent who are working for the multinational companies and procuring orders for them, now their services will become an export of service. Because in the recipient base, they were already earning foreign exchange. Again, they continue to earn the foreign exchange because in the case of export of service, we all know 5 conditions need to be satisfied. 4 conditions they were otherwise satisfying already. They were in India, recipient was outside India, payment was received in control foreign exchange, they were not the distinct entity. The only problem was place of supply, which has been amended now. So with this amendment, now they will qualify as an export of service. So lot more relief to the litigation with regard to the definition of intermediary, because intermediary was defined as a person who arranges or facilitates the supply of goods between two parties, whereas the actual supply is being made by the other party in addition to the service provided by the intermediary. So it was a complicated definition. So there was always legal disputes also. Even E and Y was facing that issue, and ultimately the case was decided in their favor. Now everybody will say it's a welcome change, but kindly look at the other aspect of it, which is not being talked about in the WhatsApp group and all that. And that is, it has a negative impact also. For example, a person in Ludhiana who was engaging an agent in USA to procure order for him. So earlier on, because the place of supply was outside India, it was not an import of service. Because in the case of import of service, supplier should be outside India, recipient should be India, the place of supply should also be in India. This place of supply being the location of supplier. So obviously, when that Ludhiana agent who is exporting the hosiery garment to USA and engaging a USA agent was not paying tax under reverse charge as import. That's a different issue. In case he would have paid it and is in export, he would have entitled for the ITC. But the fact remains that now these services will become taxable whenever we are appointing a commission agent who is working overseas and procuring order for the Indian companies. This is one part of it, which is not being discussed in the WhatsApp group and all that. Then the second change is with regard to tour operator also. For example, I am arranging a tour for a foreign national in USA who want to visit India and travel. This service has now become export. But at the same time, when I am receiving B2B services from overseas hotels and all that, now that will become taxable. So it has got the other aspect also, which I just want to brought to your knowledge. Second important change is with regard to the post-sale discount. I know because we are contesting number of cases on this. To qualify as a post-sale discount, 3 conditions were there. Condition number 1, that this discount must be agreed upon before making the supply. Then credit note should have been issued with respect to each invoice. It has linked with the invoices. And third condition was that the recipient must have reversed the ITC. Now, out of these 3, 2 conditions have been dispensed with. Number 1, now the discount need not be agreed before the supply. For example, in case I am giving a post-sale discount for quarter ending July to September, so that agreement must have come before July. Now that condition is gone. And second condition is also gone, where it has to be linked with the invoices. Now, once I am making the supply and I give any ad hoc discount and the recipient has reversed the credit, I can issue the credit note under section 34. To implement this, corresponding amendment has been made in section 15 and section 34. So this is really important and very important change which has come, and it will certainly provide relief to those who are under litigation. Of course, this will applicable only prospectively. But with this amendment, they have said earlier on these conditions were there. The only problem is the department was issuing the show cause notices in spite of the fact there was commercial credit note. So now some clarity has come. So with regard to this issue will be not debated further. But kindly see, whenever I am giving a credit note, in case the department says that you have supplied any service in turn and the department is able to prove it, then this deduction and discount shall not be available to you. Then another amendment is in section 54, which deal with the refund. The first and the most important thing is, earlier on, when I am exporting the goods, making a zero rate supply, I make an application for refund. So as per the provisions introduced after the 56 GST Council, they were allowing me refund of 90% immediately within 7 days of filing the application. Now that facility has been extended to persons who are claiming refund under section 54(3), that is inverted duty structure, which means when my rate of tax on output supply is less than the rate of tax which I pay on my inputs. So I was eligible for the refund, but now they say that this 90% refund will be available to you within 7 days, subject to certain conditions, risk factor and all that. So once this provision is implemented in letter and spirit, if it is being implemented, it will certainly solve a lot of problems for the businessman and it will ease their cash flow. So this is section 54(6). Then there is amendment in section 54(14) also. You were not entitled for the refund if the amount of refund was less than 1,000. So the small exporters who have been making export through post office or couriers, etc., and the amount of GST was less than 1,000, they were not entitled for the refund. Now that restriction has been dispensed with. That means that now any exporter, irrespective of the amount, if he is exporting the goods with payment of tax, can claim refund. So this is the another important changes. And then last change is with regard to a newly insertion section 101A. We all know there is a provision for authority of advance ruling. But once I am a big company having multi-locational offices, so as a result of which, what I was doing, I was going to authority of advance ruling respective state. And in one state, the ruling is something different. In another state, the ruling is something different. So for example, in the case of solar, this happened that when I went to the Gujarat Authority of Advance Ruling, they said, okay, it's a box contract, you're liable to pay tax at 18%. When I go to Calcutta, they said, no, the principal supply of solar panel installation is only incidental, you're liable to pay 5%. So now two ruling going against each other. That means now what should I do? To my customers in Gujarat, I may charge 18%. To my customers in Calcutta, I may charge 5%. So they bring out a provision wherein they say in such cases you can go to National Appellate Authority of Advance Ruling. But unfortunately, they could not see the light of the day. And even today it is not there. So they have inserted this new section by saying that the government can notify any of the authority who can act as national authority, appellate authority of advance ruling. I think they will instruct only the tribunal to act like that. So in that scenario, it is very clear now that tribunal may be given this power, but this requires a corresponding amendment in tribunal provision sections also, which is not being done. I think they have forgotten about it, but they will certainly do it when they notify. So they will permit the tribunal. Jaise आज भी tribunal is working as national anti-profiteering cases have been shifted from authority to the tribunal. So that notification will come. So these are the only 5 changes so far as GST is concerned. If you want, I can take you to the custom if you are interested. If you are not interested, then we can simply stop here and I hand over the mic to Vinay Jain as you suggest.
Sir, I suppose since most of us are not too much practicing in custom, and as far as the other points are concerned, I suppose
maybe you're not practicing, but I'll tell you, personal baggage rules have been revised, limits have been increased. Number one, then authority of advance ruling period has been increased. But of course, inter-house movement, I have to take permission from the proper officers, which I am not supposed to take. But as you rightly said, these people are not most of us are not practicing in custom, so I am not dealing them in detail. If any
I mean,
question is there, I can answer.
see, point is, sir, incidentally, right incident, I'm really very thankful because that is the point which always used to acclaim and I used to enjoy. The person like you always, I mean, the way, in the crystal clarity way, the way you define the moment and define I mean, amendment being made by the Honorable Finance Minister, it is quite thrilling. I'm telling you, I'm too delighted to listen you always, and so equally today. I'm really very thankful, sir. I mean, for your nice deliberation. And since I don't see any hand raised on as far as the amendments are concerned, so we have to put press to this deliberation here itself. Like, and since I to move on from the indirect tax to the direct tax amendments, as friends, I already told you that the indirect taxes we had a lesser amendments because since already these amendments are being made through the council 56 council meeting, lot of things been changed in the month of July itself. But now since as far as the direct tax is concerned, sorry, it is two acts we have to I mean, we have to take up together. One is the Income Tax Act 1961 and another is the Income Tax Act 2025. And some of the amendments could be, I mean, in sequential way, the amendments been made in 61 has to take an effect in 25. And some of the new amendments before it has even seen the, I mean, light of the day. The amendments to the extent of friends, 1 and 2 amendments in Income Tax Act 2025 been announced by the Honorable Finance Minister, and I'll request once again. I'll request C. Ved Jain ji, who is an eminent personality, and it is a person who needs no introduction, and who is with us. I'm very thankful to him that he is with us today. So, friends, I request C. Ved Jain ji, who is past president ICA and now senior practicing advocate in High Court and Supreme Court, and we can be benefited by his intellects, who will take us through to this all 128 amendments in direct taxes and much more on the budget, which I mean, at a micro and micro level both, and intrinsic value of the budget also. Over to Ved Jain ji, please, sir. Platform is yours. And again, Satish also, whenever he joins, sir, he is up. Also, again, I'll welcome him, and over to you, sir, please.
Thank you, Vinay ji. Thank you, Batra ji, for giving an introduction to the various amendment on the indirect taxes. All my dear friends, I can see the large number of participants joining in this program, the budget special, which we are doing on behalf of the G19 bar room, etc. Friends, the budget was presented almost 50 hours back at 11 o'clock on the 1st of February. And now a lot of discussion has taken place. You would have read the various provisions, etc. Interesting aspect of the budget, as I can just give a few highlights in the first few minutes on the part, is that the geopolitical situation this time was really difficult. The tariff issue was hanging at that point of time. And then the crisis, US, Iran, Russia, Ukraine, all were hanging. And despite that, country has done very well, as the numbers show, that fiscal deficit has been under control in the last year. As against 4.5 projected, it has been 4.4, and the next year fiscal deficit is 4.3. Collection of taxes, both on direct and indirect taxes, has been quite reasonably good that way. And looking to the numbers she has projected, I believe the reactions all along have been positive, except capital market, because of the STT rate. I believe the hike that was that one of the reason where this issue has happened. Now, one thing interesting in this budget was, I was expecting that the income tax newly enacted just 3-4 months back, what the finance minister will be doing this time, why there should be an amendment to the Income Tax Act of 2025, which is still to be born. It is 2 months away to have its life start beginning, make a beginning. And what she would like to make an amendment to an income tax old act of 1961, which is going to die down in the next 60 days. So these were the two challenges, and I always was wondering what will happen in case he says that we have newly enacted the law just 3-4 months back, and this new old act is going to be expiring soon. Where is the need to make any amendment? I'm proposing no amendment to any act. But as I said, this is not possible, and she will never do, the finance minister. She has to give job, keep everybody employed, and including the speakers like us, that we get enough material to speak on amendment to the Income Tax Act. And when I opened up this document of the finance bill and I looked into, I was just wondering how many amendments it has made on that issues. Not only the old act, the new act has also been amended. As the Vinayji was saying, there are 129 clauses making amendment on this part, and out of which 29 clauses are at least on the Income Tax Act 1961, which is going to die down on 31st March, and roughly 88 amendment on the new Income Tax Act, which is still to be born. Now that's a job which he has assigned to it. But I must compliment the Honorable Finance Minister, the way she has carried out the amendment, she has carried out the various issues. Though there are certain issues which are going to be critical, which are going to be, I think, difficult to implement, and which goes something, so I think the basic tenets of the law, but there are certain provisions where she has given a good relaxation and try to clean up the working on this part, on this issue. Now, friends, I would just like to take you to the various amendments which have been proposed, and not in that serial order of the amendment which have been proposed in the section wise, but looking to the relevance and the importance and the time constraint, because this budget has given so much material, you can speak hours and hours on that issue, but I will try to confine major issues concerning that. As Vinayji said in the beginning while introducing the speakers on the issue, my suggestion will be that since the whole budget direct taxes proposals are to be covered in this lecture, whatever the ideas and thoughts and questions you may have in your mind when I am speaking on that particular section and topic, I will suggest if you can just put in the chat box, and I will try and I will request Vinayji, in time permitting, we will take each of those questions thereafter on that part, because this meeting will be a little different of the normal meeting which we normally does every time, where we have an interactive meeting, because this, if we keep it an interactive meeting, probably we will not be able to cover up all those issues on that issue. Now, when the budget is presented, the first thing which was in my mind was, are we really ready to implement the Income Tax Act 2025? Compliment the Honorable Finance Minister. The first sentence he said, now Income Tax Act 2025 is going to be implemented from 1st April 2026. The rules and the forms and the notification, the department is ready, and it will be put in the public domain soon. So now we need to be mentally gearing up that Income Tax Act 2025 will get implemented from 1st April 2026, and each of us professional has to get ready and read this Income Tax Act 2025, read these rules, read notification, and make sure that we are able to comply all the provision. My confidence comes up when we in 2017, the GST Act was implemented. I think the whole credit should go to the chartered accountant profession, that they geared up and they made the law so simpler for the tax compliant, because we are the only chain from the administration to the person who's going to be get affected, that we bring that complexity, try to solve that problem, because the tax laws are complex. It's not easy for a taxpayer to understand it. We as a professional try to make life easier from both sides, taxpayer making him understand how he can comply with, and in case of any issue arising, going back to the administration or executive, please amend and please clarify on that issue. Now, going by one by one, the amendment made is, the first thing which will come in mind the moment that finance bill is presented, is there any change in the tax rates? The first thing which comes in mind, yes, whether there is any change in the tax rate or not. Fortunately, this time there is no change in tax rate. So for individual, AOP, BOI, partnership firm, LLPs, companies, cooperative society, the income tax rate, the surcharge rate, the education cess continues to be exactly the same which was earlier. So all those ready reckoner which were last year can be used easily in the new this for year, which is the financial year 25-26, assessment year 26-27, and for next year as well, that is the tax year 26-27. Though the new act will be there, but the rate will continue to be the same. But one important change which has been made, I believe you all must be looking to is that the tax rate of special of 60%, which is applicable in respect of unsecured loan, unexplained credit, unexplained investment, 68, 69, 69A, 69B, C, D, E, which was a draconian 60% rate, is being reduced back to 30% as a normal tax rate. Some of my friends will recall that this provision of 115 BBE was introduced during the period of demonetization when the taxation special amendment law was enacted, effective from December 2016, to cover up those cases where people intended to deposit cash, etc., in the bank account and pay tax as advance tax on that so at a normal rate. In order to discourage those people using this avenue by putting the old demonetized notes in the bank account and declaring the income, then this provision was introduced that in case you do so, we will levy tax at 60%, surcharge 25%, and then 4% education tax 78%. And then in add-on, like in case you don't declare it, then 10%. Now the law is being simplified. The tax rate will be continue to be 30%, but the two riders will still continue to be there. I would just like to show you the relevant slide which will help you out on that point. Just look at this. Share kar diya. See, the provision rate will be 30%, but this will not be a normal. In case your income is less than 24 lakh or 4 lakh, 8 lakh, still the rate will be rate applicable will be 30%. So meaning thereby the rate will not change because your income has gone down. Now you see this where the total income of an SSC referred to in section 102, 103, 104, 105. This is our new section 68 of 68, 69 under the new act. Determined the income tax shall be calculated at the rate of 60% at 30% as against 60%, and no adjustment in respect of any expenditure or allowance or set off shall be allowed on that part. So now this is the new provision which is there. Existing only rate has been changed, meaning thereby that as and when any addition is made on account of 60% on this issue, then probably this provision will not 60% will not be available, 30% will be applicable. But in case you have a carry forward loss or any loss from any other provision, etc., that adjustment will not be allowed on that part. Now, there is an additional benefit which is coming in. Now, if any person in his own return declare any undisclosed income without telling any source, 68 or 69, or any investment without telling any source, that income will still be taxed at 30%. Since this income is getting disclosed in the return itself, then it will not be liable for penalty otherwise also. So meaning thereby the life has become easier for this. Now it will it will give an option to the people that in case they have any income or etc. which they want to declare from 1st April 26, this will be applicable under the new Income Tax Act only. So this is not for the current financial year, for the year starting from 1st April 2026, which will be known as the tax year. If any person had deposited any money in the bank account or any undisclosed investment in that year, and if he includes that income in his return, pays tax at 30% plus whatever surcharge education says, then there will be no challenge and no issues arising and no penalty on that issues. Now the second change is on the MAT, the tax rate which is there. Now when we see the MAT, on the MAT rate, the challenge is now as on date, there are two regimes. One, in case you opt for the new regime, which is called Section 115BAA, tax rate is applicable on a company at 22% plus 10% surcharge and plus education cess. But you are not eligible to claim any exemption or deduction in Chapter 6, which is 80IA, 80IB, 80IC. You cannot claim additional depreciation. You cannot claim any additional benefit also. Now, but MAT is not applicable. There are companies which continue to enjoy the benefit of the old provision, but they are governed under the old law. The tax rate applicable may be 30%, but they can get an exemption of 80IA, 80IAC, startup, etc. That benefit is available under the old regime. Now, in order to push all these companies to go back and adopt the new regime of 22%, it is proposed that the minimum alternate tax rate is being reduced from 15% to 14%, but with a condition that carry forward of such MAT will not be allowed. First, this is one. I will say the Honorable Finance Minister in the budget speech say in order to encourage company to switch over to the new mode. But in fact, it is pushing to the companies that from 1st April to 2026 onward, in case you are paying 14% MAT, you will not be allowed to take it, carry it forward and adjust against the future liability on that part. At the same time, it is being said that whatever MAT credit you are having as on 31st March 26, that will get frozen. No addition will take place thereafter. Meaning that, but in case you adopt the new regime and your liability of regular tax is there, then to the extent of 25%, you can take the benefit of the MAT credit. So meaning thereby full MAT credit will also not be allowed. If you permit me, I can just demonstrate you the implication of this, how it is going to affect the various companies and how the decision is to be taken. Because the two issues will arise on an issue. Particularly electricity company which are enjoying benefit of 80IAC, 80IA4 and startup which are enjoying benefit of 80IAC, etc. already. Now, but GIFT City people are, I will just show you the implication. Now, this, can you go to next slide? Now, this is, I just will show you the slide, this just for the purpose. Share. Now, this is the minimum alternate 15 to 14%. No carry forward from 26, 27 onward. Existing MAT credit allowed only to those companies which switch over to new regime. Intent is to push no impact on units in GIFT City. GIFT City is out of the MAT, which is the most favored. Can you go to the next slide? Now, I just show you the calculations. Now, you can just try to understand how this is going to affect and whether it is really beneficial. Take the year tax year 26-27, a company whose total income is 1,000 crore and it is having an opening balance of a MAT credit of 10,000 crore rupees because electricity companies are still having a large number of the MAT credit. It is out of 1,000 crore rupees, 900 crore rupees is the income arising from the electricity production, whatever transmission, etc. 100 crore is other income. So it is 100 crore rupees income, which is going to be taxed at the rate of 30% plus 12% plus 4% at the existing working. So tax will be 35 crore rupees. And since it is book profit is 1,000 crore, applying the new rate of MAT, 14% plus S, 16.3, so it will be 163 crore. With the result, this company will be required to pay 163 crore rupees of tax on the basis under the old regime and no more working with there. But in case it opts for the new regime as the finance minister is proposing, now 1,000 crore rupees will be the total income. 80I exemption will not be available because it has switched over to 115BAA. The tax liability on this under the new law will be 22% because that is a 115BA, and the total tax payable will be 251 crore. Against this, 25% will be eligible for set off from the out of the 10,000 crore rupees is a MAT credit available. With the result, it will be required to pay 188 crore rupees of tax as against 163 crore, which it would have been eligible to, otherwise it will continue to old regime. And that means, and with the result, its MAT credit get reduced from 10,000 crore to 9,937 crore. It loses that credit, an additional 25 crore rupees. So switching over to the new company may not be ideal for all. It may still be good for all such company to continue in the old law. And how this is there, I try to work out another example where the income is 600 crore rupees as against 900 crore rupees earlier year. Here also the benefit will still to be under the old law and not to new law. And when it will be beneficial, can we go to the next slide, please? Now, in case this, I try to work it out, that in case income is 462 crore rupees, then only it will be a revenue neutral because the tax will come exactly the same, which is there. So meaning thereby, my calculation says, can you go to the percentage which you worked out here, year-wise? Now, can you, here this chart indicate that it is only when your income is 46.2%, which is exempt, till such time you are not benefited to switch over to the new regime. So you can still wait for switching over to the new regime because this section, can we go back to the sections? Now, I would just like to take you back to the section. Why I put in the slide? Normally, I don't put the slide. If you see, this is the important. The provision of this subsection shall be applicable only to the NSSC, being a domestic company that has exercised the option under section beginning on or after 1st April 2026. So meaning thereby, it is not necessary for a company to switch over to the new model 115BAA starting from the very first year of 2026. It can continue under the old regime, that is paying MAT of 14% and not to take a credit of the same till such time it is not benefited by the under the new law. And my calculation shows that when your exempt income exceed 46%, then you are not benefited under the new regime. It is only when your total income goes down below 46% of your total income, that's a book profit, then probably you may be having an advantage switching over to the company. So suggestion to the all this electricity company and this startup companies also will be that in case your income exempt is more than 46%, you may continue to be under the old law, and paying 14% MAT will be still be a good proposition as compared to switching over to the new model and taking advantage of 25%. And why this calculation of 25% versus 14% is suitable? A crude way of calculation is against 25%, you are eligible for 25% of that. So when I paid 25.17, and if I can take a credit of 25% of that, that comes out to 7% of that issue. So that will be roughly 18% of that issue coming it out as against 14%. So still you are saving a tax of more than 3% on that part. So this is, I believe, the MAT implication which is there, but there is no implication of MAT on foreign company because the regime will continue to be there, and MAT and this new mechanism of fraud will not be applicable in the case of a foreign company. On top of it, in the case of a foreign company which is governed by presumptive model of taxation, the finance will provide that such company will not be liable for MAT on that purpose. So presumptive model of taxation itself captures that issue, so that there is a now clarity coming it out that it will not be liable to pay MAT on that issues. The third change on tax rate is on STT, which I need not mention. So there is a change because looking to the feature and option, the way people have been gambling, this is being considered as a sin tax, not STT really on the increase. The rate almost has been double, more than doubles. And that's a issue which is on the market capital gain capital market is facing the issues on that part issue. Having explained this all mechanisms of the MED, now let me switch over to the one important and interesting change which was desirable. One was regarding issue of ESI and PF. Way back in 1984, the Income Tax Act has introduced a provision of Section 43B. And the reason at that time of introduction was that many companies used to provide for liability in respect of notices issued on taxation, etc. And where litigation was still on or not making payment. So that's why there was a mechanism provided that tax duty cess deduction will be allowed while computing business income only in the year in which it is actually paid. Going over a period, so Section 43B, number of clauses has been added, which will included bonus to the employees, then it was interest to the bank, then interest to financial institution, and then leave encashment also was added, and then top of it, ESI, PF, etc. was added. So then there was an amendment made in 1987 looking to the employee's interest that even employee's contribution, which is deducted by the employer from the employees, and if it will be deemed to be its income first, 224 section was amended to provide for that whatever employer is deducting from the employee's salary as a trustee, it is income and will be allowed as a deduction under Section 3615A if it is deposited before the due date. And due date was due date of PF and ESI. Now, there was a lot of hue and cry on that issue continued, but time and again provisions were amended and the law was relaxed, saying that in case you make the payment before the due date of filing the ITR, then this deduction will be allowed. But still confusion prevailed because the allegation was that 3615 implies contribution, 43B does not apply because the due date has to be of PF ESI and it has nothing to do with 43B. We had Delhi High Court judgment in the email limited and various High Court in favor, but unfortunately, Supreme Court checkmate judgment came in 2022 saying nothing doing 3615A stands as it is, and in case employee's contribution has not been paid within the due date, then this deduction will not be allowed. And on top of it, the amendment was made in Income Tax Act in 3615A also, and saying clarity, providing a clarity that by inserting an explanation that in case it is not paid before the due date, it will not be allowed a deduction. This provision I always used to call a draconian provision. How can you say that if ESI, PF which got deposited 1 day, 1 hour, 1 month late, that exempt deduction will be not allowed for all times to come? Fortunately, this finance bill has proposed an amendment, though it is effective from next year, that is next year starting from 1st April 26, by putting a clause in Section 29, which is the 3615A replica in the new Income Tax Act, saying that due date for the purpose of ESI, PF of employee's contribution shall be the due date of the ITR. Meaning thereby, in case an employer has deducted ESI and PF from the employee, he can deposit it before filing the due tax return. So tax return 31st July, 31st August, 31st October, 31st November, whichever is due date, you can deposit it. You get a period of roughly, in the case of April, roughly 16 months, 17 months, 18, 19 months, and 20 months that may issue. But still one challenge will continue. In case it is not deposited before the due date, it will never be allowed as a deduction. As against employer contribution, which says that in 43B, it will be allowed in the year in which you deposit. Now, in case of employee's contribution, there is a concession now. You can deposit before the due date of ITR, but if it is too late, then deduction will not be allowed. I believe this is a welcome change which has been made, and I'm quite reasonably hopeful that this type of amendment will require. I have all along been saying, if a law is made which is practically impossible, which is arbitrary, that amendment is bound to happen today or tomorrow. This is one of the provisions I have always been saying that one fine day, this is going to happen, and this has happened. My only wish is that this law is declared clarificatory by the court. that challenge will come up because this amendment is under the new act and not under the old law. And the court will have to analyze this issue whether an amendment made in the new law can be said to be a clarificatory so as to apply to the old act also. Because the stand of the government is that the new law is a replica of the old law, but it is a simplification exercise. If that be so, what is being intended to be done in the new law should be equally applicable to the old law, and that should be considered to be a clarificatory amendment on that part. When I'm touching upon this issue of deduction from the income, I may incidentally touch upon another issue which has come up and which may affect a lot of issues. Now, as on date, we had a long history of a dividend income. Now, dividend, etc. income which is received was earlier used to be taxable. In 1998, we adopted a new model saying dividend income will be exempt. 1034 we introduced on that part, 1038. Thereafter, we again went back in 2000 saying now dividend income will be taxed. And in between, we had a section 14A saying that expenditure incurred in relation to exempt income will not be allowed. Then we had a lot of controversy on this, how much interest can be imputed on the dividend income, which has been invested by the assessee in the investment on which share. And now we had an amendment in section 57 saying 2 years back that in case of a dividend income, only interest to the extent of 20% will be allowed as a reduction. Now, this finance bill proposes that no deduction of interest will be allowed against dividend income. Now, this is again going to pose a challenge, and my apprehension is the issue which has arisen on section 14A will again crop up now. Now, there is bound to be some dividend income in the hands of a corporate make investment. There is going to be bound to be investment in the share. There is bound to be some dividend coming out of that on issue. And if that be so, and any interest, the assessing officer will dispute it, that a part of the interest paid by you, I will allocate or attribute it to the dividend income, and then hence I will disallow that. He can use two tools using it 5657, or another tool is 3613, where the expenditure incurred wholly for the purpose of business only. And then he say dividend income I will consider the income from other sources. So I will use 3613 to disallow there, or here I will say 57, this provision. Now, interest deduction will not be allowed against dividend income. That's another which a change has been made onto it. Now, going by the importance of the topic, looking at time working constraint, I can go to the capital gain. Buyback is one of the issue which has arisen 2 years back. Now, it has flip-flopped. Earlier, this provision was introduced in the Companies Act to facilitate company to restructure its capital, where the promoters believe that the money is not required, there is surplus money, why not to pay back to the shareholders and buy back their share, etc. And many large companies, particularly IT companies, which have got huge cash, like Infosys, TCS, these companies have been buy back the share. We had different model over a period. The last model before the buyback scheme was amended in 2024 was that just 20% tax need to be paid by the company which was buy back the share. This was a very simple model. But revenue thought that there is an arbitrage that company just pays 20% tax on the dividend as against a person who gets that money of the buyback share. He may be required to pay tax at the rate of 37, 39, or even 37% on that part issue. So that concept was there irritating the revenue, and then they amended the law saying that whatever the money you are receiving on buyback of share, it is a release of accumulated profit by the company to the shareholder, and hence we will tax it as a dividend. Now, this provision was there, and now there was a lot of hue and cry because resident shareholders stand to lose. Individual share particularly stand to lose. When Infosys did it just 6 months back in the month of July, there was a lot of articles written on that issues, that this is creating discrimination, firstly between individual versus corporate SSC. Why? Because corporate SSC, even if you treat it as a dividend, then they get an exemption to the extent of the dividend further distributed under Section 80M. And non-resident versus resident, as dividend income is taxable at a very nominal rate under the treaty. We have a treaty with India, Hong Kong, where 5% rate is applicable. We have a rate treaty with the UAE, where a 10% rate is applicable, where we have a treaty with Singapore, 15% rate is applicable. So they were far more benefited because of capital gain. They say whatever the money we are receiving, we will pay 5% or 10% tax, and on top of it, we will get a complete capital loss of the investment we made. Now that was it. Now it is being brought back. They say no, it will be considered to be only a capital gain depending upon your holding on that issue, buyback, etc. So far you are a non-promoter, no issue. Your tax rate will be whatever capital gain, long-term, short-term, 12.5 or 20% will be applicable. But in case you happens to be a promoter, then you need to pay tax, because then we will consider it to be as good as your dividend, but to the extent of your capital gain. If you have bought it for 10 rupees, you are buying back at 20 rupees, you are getting 10 rupees extra. So you need to pay tax on that part as a normal rate. But in addition, you need to pay tax, which you would have paid tax over and above had it not been had it been a dividend income. Now, in that regard, in case of a company, the rate will have been 22%. So you paid short-term capital gain 2%, long-term you pay 9.5%. And in the case of individual, it has to be 30 minus whatever the rate is applicable on that part. So this is the table which you can see that in the case where the promoter is a domestic company, because 22% is rate, short-term 20% you are otherwise liable to pay, you need to pay additional 2%. And long-term you need to pay 9.5, that is 22 minus 12.5. And in case of an individual, the rate is 30%. So on short-term you have paid 10%, 20%, then you pay 10%. And on long-term you have already paid 12.5, you need to pay 17.5% extra rate on that issue. This is the provision which has been created on the issue. And who is a promoter? Promoter is, in the case of a SEBI listed company, whosoever get classified as a promoter under the SEBI rules. And in case of a not SEBI unlisted company or private company, any person holding 10% or more than equity will be considered to be a promoter on that issue. So that's a definition which has come up, but it again opens up a lot of issues on that part. To whom it get benefit or whom. Now those companies which were earlier benefited because of ATM, they will stand to lose on that part also issue. But now good part is only the difference will be considered, not the entire consideration will be considered. It's a good for individual, particularly small shareholder, non-shareholders. There are challenges, I think, in tax planning which may arise. It may not be appropriate for me to deal with in this lecture on that part, but still I believe in case a promoter just before the buyback sells his share to another promoter, then probably the first sale will be covered under the normal provision because it is not a buyback. And the second promoter, the difference will be too small between the value at which he has purchased the share and the value he will be getting on the buyback of the share. So still, I believe a lot of gap has been left out. Let's see how the things goes on that part on the issue. Another interesting aspect of this budget is some amendment which are retrospective in nature, and some amendment which goes back to the what we call a certainty in the law, or a law where it brings a little bit contingency. When I am talking of a capital gain, sovereign gold bond is one such issue. In 2015, the government announced a scheme of the sovereign gold bond in order to encourage people that not to buy the gold, physical gold in the market, instead to buy the gold bond. And the scheme says that you give the money, equivalent amount of the value, quantity of gold will be the bond will be issued. These will be redeemable at 5-year or 7-year period, depending upon the scheme. You get a small amount of interest. and at the time of redemption, whatever the capital gain, that will not be taxable. There was no condition that secondary buyer, when he gets a redemption, it will be taxed. All along, this scheme has been going on this part. Now, the challenge has come before the government is that government has issued this sovereign bond in 2015, 16, 17, when the gold rate was hovering 10,000, 15,000 to now it has gone to 1,50,000. When the redemption happens, you have to give equivalent amount of gold, which is substantial. Because if you have given 100 gram of gold at time, so bond you are holding, and you have paid 1 lakh rupees at that time for 10,000 rupees per 10 gram, now you will get 100 gram, which will give you roughly 15 lakh rupees. And that to tax free on that part of the issue. Now, government has made an amendment saying that from 1st April 2026, this benefit will not be available to a secondary buyer, meaning thereby exemption will be available only to that bond holder who has originally subscribed to the bond and continues to hold till maturity. This was not part of the original scheme. So my only point is that government may amend the law, but should be done prospectively, not in the manner in which it has been done, because all those people who have bought sovereign gold bond like this, probably they may be in difficulty on this issue. The only saving grace is that this provision is going to come into effect from 1st April 2026. The people who have bought it today and maturity is coming before 31st March, it will be advisable to surrender and buy in the maturity, even if they are a secondary buyer, because exemption will be available till 31st March 26, and thereafter this exemption will not be available on that part only. I can skip the small another part. There is a small amendment on the land acquisition, which has also been made of the part of the capital gain. Now I can switch over to the another important aspect of assessment procedures. A lot of changes have been made and life has been made much easier for the taxpayer on that part. The first thing which the government has done is splitting up of the dates of filing ITR. Now we have 3 dates, 31st July for all non-audit cases. We have 31st October for all audit cases other than TP cases, and we have 30th November for all TP cases. There always is a hue and cry on 31st July because the system getting choked, so many taxpayers filing the return. In order to address it and to stagger the return into 2 parts, all those taxpayers who do not have business income, their due date will be 31st July. All those who have business income but who are not required to get the tax audited, their due date will be 31st August. So this has been split into 2 parts, 31st July and 31st August on that part. ITR 1 and 2 will be 31st July and other ITR business income will be 31st August. Though in the amendment to section 139(1), which has been made also, because this will be applicable from assessment year 627, which is the current financial year, the return will be doing there. And also in the subsequent year, it has been made that it is business income versus otherwise, but for trust also it is being said that due date will be 31st August. So let us see how this clarification is carried out. This is a good change which has been made, but this will help in staggering and avoiding IT rush, which used to be there, and the system getting chalked and the portal getting taking time filing the return. Another change in the due date of filing the revised return. Now the revised return earlier used to be a period before the completion of assessment, which used to be 2 years from the end of the assessment year. It was reduced 1 year from the end of the assessment year. Then it was reduced to 9 months from the financial year, assessment year that year. So now, as on date, the due date for last date for revising return is 31st December, which gives a person who is required to file the return in July 5 months, who is required to file the return in October 2 months, and a TP person only 1 month. Now the government says this period can be extended and with a extra piece. So a return can be revised up to 31st December, but you can revise the return in the next 3 months also, that is before the close of the assessment year. But you have to pay an additional fee of rupees 5,000 if your income is more than 5,000 rupees. If your income is less than 5 lakh rupees, if you want to revise it, then the fees, additional fees is 1,000 rupees on that part. So this is the change on the revision of the return, which I believe is a good change, because otherwise after 31st you were required to file an updated return. Now this takes you to the updated return mechanism. Now law provides that a return has to be filed before the due date. What happens if you are not able to file a due date? This has been a continuous push to the government that voluntary compliance is a better compliance as compared to a forced compliance or enforcement mechanism. Frankly speaking, I have been pushing this agenda in all pre-budget memoranda when I was with the Institute of Chartered Accountants of India, as well as with the SOCHM. They saying that please allow people to file return at any point of time by charging extra interest and extra tax. Fortunately, this 139(8)(a) provision was introduced 4 years back, allowing filing of updated return even when you have missed out the return or even you have carried out something wrong to update your return and pay extra tax. Earlier there was 2 years, now it is 4 years from the end of the assessment year, which is 5 years from the end of the financial year, which is tax year, which is there, but what we do. Now, in that, this updated return mechanism is available only when you have, for the benefit of the revenue, meaning thereby there is additional tax payable. So option was available when you have an income and you want to increase the income, or when you have a loss and you want to convert the loss into income. Now, I believe the government has realized the issue that it has to be relaxed further, because there is a possibility you have filed a return of a loss and you still want to reduce the loss. You have claimed extra loss. It is still beneficial to the revenue. So now amendment is being proposed that you can still revise the return where your loss is getting reduced. You can still revise the return on that part, on that part. Another important change, and which I will say is the most important change in this finance bill to 2026. Even after receiving a reassessment notice, where the assessing officer has identified that you have concealed income, your income has escaped, and you don't have an answer to that, even that, you still have an option to file an updated return. That provision has been introduced. Only thing is you need to pay extra 10%, just extra 10%. Updated return. Now visualize how it can work it out. You have particular income which you have not disclosed. You can you could have declared on your own, say your income is 1 crore rupees. And 10 lakh rupees is the income which you have not disclosed by mistake or by intention or by omission, whatever it is. Now, first thing is, in case you are filing a return, you need to be updated that 10 lakhs rupees should have been included, normal tax would have been paid. In case you have realized the mistake after filing the return, but before the due date of revision the return, which now will be 31st March, you can still do it by paying the interest only for that part. If you have missed out that part also, you can update the return within 4 years, depending upon paying extra money. If you do it within 1 year, 25%. If you do it after 2 years, well, then it's 50%, then 60%, 3 years, and then 70%. Still you have not done, and you receive 148 notice. You can still update the returns by paying whatever was required to pay updated return and pay 10% extra. I have done a calculation looking into this, how this is going to work. I would just like to share you for the benefit of you see. I hope you are able to see this slide. I have just worked out an example. This is for assessment year 22-23. 1 crore rupees income escaped is 10 lakh rupees. You say 10 lakh rupees the income. You can file updated return up to 31st March 2026 voluntarily. You can file updated return voluntarily. Now, if you find a voluntary return, 3,60,000 will be the tax 36% on this. You will be required to pay interest 234B on this part, which will be starting from 1st April 22 to 31st March 26. That will be 48 months, and 48% will come to 1,72,000 rupees. This makes tax and interest of 5,32,800. And then you will be required to pay additional tax of 60% because you are revising the return, updating the return within 3 years from the end of the relevant assessment year. This is 3,19,000 rupees. So if you so moto revise, update the return, 8,52,480 rupees you need to pay. But if you are filing this return after you have received the 148 notice, then this 360, 170, 319, 850, you need to pay 10% extra of this tax, meaning thereby 148 notice with just 10% extra, you can get out of this on this. This part I will deal you with later on when I will be dealing with the penalty provision. The second part, this on the table, let me come on that part later on when I talk on immunity on this procedure. So this is the issue which is on the what we call updated return on the issue. Because now 148 also in option to be given. When I am talking of 148, now it takes me back to the issue of Jao versus FAO 151A, which may be, I think, agitating your mind, what is happening and how it is happening. This is a typical case this year in the budget. Some of my friends who have been listening to my lecture, who have been attending my seminar and conferences, probably know one thing which I used to talk about of an example or of analogy which I used to draw with the science in the Greek, however, where the science has developed. Let me just get back to some Hindi dialogue here. यूनान, जिसे हम ग्रीस कहते हैं इंग्लिश में, साइंस बहुत तरक्की पे थी वहां पर, और साइंस इतनी तरक्की कर गई कि वहां भगवान को लोग भूल गए. जब भगवान को वहां भूल गए तो इंद्र गए भगवान के पास कि साहब आपको कोई याद नहीं करता, और सारे लोग आज साइंटिस्ट की पूजा करते हैं और उन्हीं के बारे गुण गाते हैं. तो भगवान को बड़ा गुस्सा आया और इंद्र को कहा कि उनको जाकर कह दो कि मैं तुम सबको बर्बाद कर दूंगा और आप भगवान की पूजा करना अगर छोड़ देंगे तो वो इंद्र आए चल के साइंटिस्ट के पास कि भगवान बहुत नाराज हैं और आपको बर्बाद कर वो कह रहे हैं. तो भगवान साइंटिस्ट बोले कोई बात नहीं, हम देख लेंगे. तो भगवान ने कहा कि इंद्र को कि जाकर कह दो कि मैं इतना पानी बरसाऊंगा कि सारा यूनान बह जाएगा. तो बोला कि आप डेट फिक्स कर लेते हैं, आप जिस दिन पानी भराएगा हम भी देख लेते हैं आप में कितनी ताकत है, हम भी देख लेते हैं. डेट फिक्स हो गई 15 अगस्त. 14 अगस्त को साइंटिस्ट लेबोरेटरी में गए और केमिकल से फ्यूम लगाए और इतने फ्यूम लगा दिए कि सारे यूनान को शीशे की छत से ढक दिया. सारे यूनान को शीशे की छत से ढक दिया. 15 अगस्त को बारिश हुई, भगवान ने खूब बारिश होती रही, जितना बारिश का पानी पड़ा वो सारा पानी समुद्र में. इंद्र गए फिर भगवान के पास भागकर कि साहब आप तो फिर हार गए, आप बारिश कर रहे हैं, वो सारा पानी समुद्र में जा रहा है बह के, और साइंटिस्ट तो जीत गए. तो बोले अगर ऐसा है तो ओले बरसा दीजिए. सब ओले बरसा दिए गए. उस शीशे की जितनी चादर बनाई थी साइंटिस्ट ने वो टूट गई और पानी समुद्र बह गया. इंद्र फिर आए, बोले भगवान से आपने देखा क्या हुआ आपका, आप हार गए और सी टूट गए. बोले नहीं, आपका खुदा बेईमान. अगर वो उसने कहा था मैं बारिश करूंगा, हमने इसलिए शीशे की चादरें बनाई थी. अगर वो ये कहता कि हमें ओले बरसाने हैं तो हम इसकी स्टील की फौलाद की चादरें बनाते ताकि आपके ऊपर उसको भी नहीं होता. सेम थिंग इज हैपनिंग हियर इन टैक्स. इनकम टैक्स में 2021 में, 2017 वैसे तो 2016 से फेसलेस लेस ह्यूमन इंटरफेस, ऑटोमेटेड इश्यू ऑफ नोटिस, ऑटोमेशन एटसेट्रा हैज बीन गोइंग ऑन. 2021 में कानून बनाया गया कि दैट इनकम टैक्स नोटिस विल बी इशूड ओनली थ्रू ऑटोमेटेड प्रोसेस and there will be no human interface by the faceless assessing officer. And the scheme has to be framed Scheme was framed is 2022, clearly saying that 148 notice will be issued only in a faceless manner. Based on that, SSC have been contending that notice issued are not in line with the Act and the rules, and hence these are bad in law. If I am correct, at least 7 high courts have delivered judgment where they have said that 151A notice issued by a judicial assessing officer is bad in law because there is a human intervention, because he considers your reply 148AB notice. You submit the reply and he has to take a call. He being a judicial assessing officer, there is a human intervention which is not correct and which is not in accordance with the law made by the government, hence quashed. Those matters are now pending before the Supreme Court. But now another Supreme Court has come. The government says last and amended 151A, it will not be applicable. A new provision is being introduced, 147A, enabling issue of notice by a judicial assessing officer. And this amendment is being made retrospectively from 1st April 21, with the result, all those what has happened, all litigation, etc., will come to a knot on these issues. This is one area where the amendment has been made. When I am talking about this issue, let me deal with the 3 other issues where similar amendments have been made. One, this is 151A. Another area was regarding the international taxation, mainly non-residents, where issue of transfer pricing goes to DRP, and there is a procedure prescribed in 144C. Different High Court, particularly Madras High Court and Bombay Karnataka has taken a view that a notice can be offered. Karnataka and Bombay High Court has taken a view that limitation period will be what is prescribed in 153. 144C does not extend the period. Supreme Court matter traveled. There was a split judgment. One judge says no, it can be done. One said it cannot be done. But now the government has intervened and made a retrospective change saying no, the period will stand extended, and 153 has to be read along with 144C, and that's why this amendment has been made. Another amendment which has been made retrospective is regarding the 60 days period which was prescribed that TPU has to issue an order at least 60 days before the date of the completion under 153. For that part also, it has been clarified that this period, this is also a retrospective amendment. And the most important retrospective amendment which is going to affect is on DIN, document identification number. This document identification number notification was issued on 1st October 2000, issued by a circular effective from 1st October 2019. I will just like to read out what this circular says. I will just like to show you what is this circular says. This is. No, can you see this? I am reading out the relevant extent. Any communication which is not in conformity with para 2 and above shall be treated as invalid and shall be deemed to have been never issued. ये पार्ट है सर्कुलर का 14 अगस्त 2000 इफेक्टिव का, और उसके बाद जब 1 अक्टूबर को ये इंप्लीमेंट हुआ तो ये स्टेटमेंट है रेवेन्यू सेक्रेटरी का ऑन रिकॉर्ड. Revenue Secretary Dr. Ajay Bhushan Pandey said, from today, any communication from Income Tax Department without a computer-generated DIN, be it a notice, letter, and order, summary or a correspondence, would be treated as invalid and shall be known as in law. This is in pursuance of the direction by the Honorable Prime Minister, in which he has asked the Department of Revenue to come up with a specific measure to the honest taxpayer are not harassed and served better. This is the substance of the circular, clear. Now what has been done? And based on this, the courts have been taking a view that any such order, etc. issued will be bad in law. Now to overcome this, a retrospective amendment is being made. This is the amendment which is being made. Stop kar dena ji share ko bhai dobara. This is the amendment which is being. The Finance Bill 26 is inserting a clause 292BA, notwithstanding anything contained in any judgment, order, or decree. This is the amendment which says notwithstanding anything contained in any. What is the problem? Notwithstanding contained in any judgment, order, decree for the removal of doubt, it is hereby clarified that the purpose of section 292B, that no assessment under any of the provisions of the Act shall be invalid or shall be deemed to have been invalid on the ground of any mistake, defect, or omission in respect of quoting of a computer-generated document identification if the assessment order is referenced by such number in any manner. I could not work it out what is the intent. Better would have been to withdraw the circular. But this is what I said, that nobody can win against the what legislature want and what other government want, despite all such litigation going on for the last at least 5 years. Doing in this manner probably is a challenge which I believe is, there are certain challenges which are arising on that part. So when we are talking of the assessment procedure, there are two small changes. Let me touch about the such assessment matters. One is the period of completing the assessment is being extended from 12 months to 18 months from the end of the quarter in which the search was initiated. The present law says that it is 12 months from the last date when the search was completed. So the government was, the assessing officer was facing difficulty in a group cases where many of the, in some cases the search get completed local or operated later, in many earlier. So in order to remove that discrepancy, now the period will be not 12 months, 18 months from the end of the quarter in which the search was initiated. So in date of initiation will be relevant. And another change is for in respect of the person other than the search person. Now there being a block concept, in case of a search person, 1 year that in which the search is carried out and the 5 year behind, they would all get covered on that part. So this was the challenge which is there. This is no issue. But in case of person other than the search person, the challenge is that even if a small amount of say 1 lakh, 2 lakh rupees entry is found in the books of the search person, the other person gets also covered in get fully covered in 158 BD, and his block is also for this all this period goes on. In order to address this issue, now the law is being amended that in case the material found is of a particular 1 year, only that year will be considered to be the block year. This is a good change, but only the challenge is in the language which I will just like to you to demonstrate on that part. Now this is the provision which is there. They say where the undisclosed income of the other person pertains to a single tax year out of the 5 tax year preceding the specified year, then irrespective of the provision of the block period in respect of such person shall comprise of only that single year. Now I believe idea should not be single tax year, it should be 1 or more years. So there is a possibility that if you may find out a document at 10 lakh rupees on 31st March of 1 year and 2 lakh rupees thereafter on 2nd April. So there will be 2 years, not 1 year. So it should be confined, not restricted. Idea should be, this is a very good move, but not to single tax year. In case the material is found for more than 1 year or 2 years, then only that 2 year will be covered. In order, then it need not be to cover the larger part of that part. So these are the on the issue, the concept of block period on that issue. Now coming back to the issue of penalty. Penalty has been quite a challenge both for the taxpayer and the administration also. So now 2 important changes are proposed on this. One, a challenge which will come to the assessee. A challenge to the assessee will be coming on that part is that now penalty will be part of the assessment order. we all know that as on date, when assessment order is passed, assessing officer issues a notice 271C or etc. Penalty proceedings are being initiated. Those penalty proceedings are kept in abeyance till the decision of the appellate authority comes when an appeal has been filed. So sufficient time is given. Now, in order to remove these two proceedings, now what is being proposed is that assessing officer will pass an assessment order and penalty order as a one order. So he will issue a show cause notice during the assessment proceeding itself that why not penalty be levied, and he will consider the reply and levy the penalty, and you will receive a notice assessment order along with the penalty order. Meaning thereby, in case an addition has been made, say of 10 lakh rupees, and it pertains to 2 years or 3 years before, and assessee is falling in a bracket of a 30% after including surcharge, education cess, and the amount comes to say on 10 lakh, 3,60,000 rupees as tax, then interest comes to say 1 or 2 lakh, 5 lakh rupees, and then top of it, 200% penalty of tax, which will be 6 lakh rupees. So there is every possibility that now onward, when you receive an assessment order, the amount of income added will be lesser than the amount of the demand that will be created. The only solace which is being given is that on penalty, interest will not be leviable till such time your appeal is decided by the appellate authority to fix it. So that interest, but demand will be there, and that demand can be recovered from you. Only that condition is that in the first appellate state, 10% of that you deposit, then demand will not be recovered further on that part. Now, this is going to be a challenge. One thing, penalty is never considered to be automatic. By this mechanism, virtually this will mean that penalty will be automatic. Assessing officer will make an addition and immediately then he will impose a penalty because he will have no option again. There was no reason why to change this mechanism on that part to levy a penalty, etc. on that part issue. I am just concerned on that part on that issue. But there is another welcome change which has been made on the penal provision. As on date, there is a immunity available when you have the allegation is of underreporting of income. In underreporting, the penalty leviable is 50%. So section 270AA says that in case when you receive an assessment order, you pay the tax as per the assessment order, whatever is the demand made therein, and within 1 month you file a application with the assessing officer and don't file an appeal against the addition made by the assessing officer, then you can get an immunity from penalty and prosecution, then you can get out of this provision on that part of the issue. So that provision there. Now this benefit is being extended in respect of misreporting of income also. So meaning thereby, whatever the mistake you have done, whatever the concealment you have done, in case you agree with that addition, you are ready to pay tax, interest, and then 100% of the tax thereon, then there will be no further proceeding, and you are not filing an appeal against that issue. Now, that gives a good idea for people to get out of this. Now I can go back to that slide again, which I was showing you earlier on one revision on the return, just to show what will happen in this case of even on 148 when you receive. This is not the slide. This is MAT penalty wale slides. पीछे वाले this is ये तो slide थी पीछे वाली. This I was showing you this slide earlier that you file a return, updated yourself, you file a return in response to 148 notice. If you don't do both, and your assessment is made under 148 or later on whatever it is in the realm, the assessing officer will be levying this 7,20,000 rupees as 200% penalty. You will be required to pay 12,96,000 rupees. But now with this proposed amendment where you can get an immunity from penalty and prosecution, instead of 7,20,000 rupees, you will require to pay 3,60,000 rupees. With the result, on an addition of rupees 10 lakh, you will be required to pay 9,36,000 rupees. So now there are 4 options available to you. I will say 5 options. First option is you pay the tax at the due time, including in the return on 10 lakh rupees, your liability will be just 3,60,000 rupees. Just 3,60,000 because 36% is the rate. But if you don't pay it, but within 3 years, I'm assuming 3 years, but you can do it in 4 years, but in 3 years you pay it, you may be required to pay instead of 3,60,000 rupees of 8,52,000 rupees before the proceeding is initiated. Still, you don't want to do it. You have received 148 notice and you want to get out of it. You can do it by paying 9,05,760 after receipt of 148 notice. But still, you don't agree. You want to fight it out and you want to convince the assessing officer. And you are not able to convince the assessing officer and you want to get out of this. Instead of 9,05,000, you will be required to pay 9,36,000. The difference between 148 contesting with the assessing officer and not contesting with the assessing officer is only of 30,000 rupees here in this case. I think that gives a food for thought. What should be done and how it should be done. That's a challenge which will come on that part on the issue. May I just mention when I was talking about this is that in case of an underreporting income pertain to cash credit 68, 69, 69, etc., then you can settle the immunity by not 100%, by 120% of the tax. It will not be 100%, then it will be 120%, but still it will be manageable on that part, on that issue. And when I talking of certain penalties, let me just complete. There is a small penalty. In case of delay or non-filing of tax audit report, penalty is leviable at 0.5%, subject to a maximum of 1,50,000 rupees, whichever is lower. This is being now converted into fees with a structured manner that in case it is within 1 month, penalty will be this, and in case the penalty is beyond 1 month, then fees, additional fee pay will be like this only. Similar is going to be for the tax transfer pricing report. So now it will be a fees, not a penalty. With the result, this will be automatic. You will not have a reasonable cause. Even if you have a reasonable cause, still because fees is automatically payable, as is in the case of a 234F, you may be knowing for late filing on issue. When we are talking of this assessment procedure, 148 assessment, reassessment, another issue is coming up is of the black money. That provision has been creating a lot of problem on this issue. So this finance bill has come out with a scheme of what we call an amnesty scheme for a period of 6 months from the day it is launched, and the benefit will be given only to those where this amount of income, foreign income or foreign asset is 1 crore or less. And idea is to give benefit to the students or professional which have been working outside, non-resident, etc., which have come to India, and in case they have not failed to report certain income of dividend, interest, or other investment they have made outside, which have got unreported. So now they can get out of this by availing this black money scheme benefit. The tax with 30% and additional 30% penalty. So you just pay 60%, but this benefit is available only to those persons up to rupees 1 crore only, not beyond. And moreover, where assessment proceedings have not been completed. Where assessment proceedings have been completed, appeal is pending, this will not be available. My suggestion is that by and large people, even if those appeal is pending, they should also be eligible to it. Because the issue is on a bona fide humanitarian ground. Small cases where due to inadvertent error, bona fide student professional income went unreported, or assets remained undisclosed. Idea was not there, ESOP, something like this was there, etc., and amount is 1 crore rupee. So restricting the benefit to those where assessment is pending, then large number of appeals which are still pending, they will still continue to clog the system, and it will be advisable that the scheme should not be restricted to only pending assessment. It should be pending appeals also, to also address the litigation. In addition thereto, you may be knowing a penalty of 10 lakh rupees is applicable in case you have a foreign income or foreign assets which you have acquired from a known sources, but you have not declared in the FA schedule. Because under the income tax ITR, in case you are holding any bank account, you have authority, etc., then you are supposed to disclose in FA what we call foreign asset schedule. Schedule. Non-disclosure invites penalty of 10 lakh rupees only. In these cases where the asset is from a non-disclosed sources, there is no tax liability, but non-disclosure, that is also part of the amnesty scheme. In that case, penalty of you are just paying 1 lakh rupees and you can get out of this scheme on that part on this issue. Having we talked about the black money, now we can talk about some of the issues arising in the international taxations. Two issues I have already dealt with. One was 144C limitation, which is 153, which I said there is a retrospective amendment made in 144C, effective from 1st April 2009 and 1st April 2009, but making effective from that day itself, meaning thereby now Roka bathroom, shelf drilling, all these cases will get covered in favor of the revenue on because of this amendment in the retrospective amendment on that issue. Similarly, where the transfer pricing officer has passed an order beyond 60 days, then where the period was less than 60 days, all those issues will also be get covered because of the retrospective amendment. Now there are few other amendments in order to encourage investment in India, to increase more manufacturing facility in India. Two major amendments have been made. One, data center. So data center located in India. So income arising which can be imputed to the overseas entity because they are data availing that facility or facility is being availed from that. Now that income will be exempt, and exemption will be till the year 2047 when we are talking of Viksit Bharat. Because data center once it's set up is a huge capital expenditure, and if you not given assurance that its income will be not be taxed for a longer period, people are not going to put a capital investment in India. I believe idea, that's why the budget clearly says that this exemption will be available till 2047. I only hope later on this interpretation or some interpretation issue do not arise the way it has arisen in Tiger Global or the way it has arisen in other cases which I am telling of sovereign gold bond, etc. This promise, what we get promise estoppel, I believe should continue to be honored till 2047. I believe, hope it will be done on that issue. Another exemption is being given in respect of capital goods, equipments, tools, etc., which are supplied by the outside person in order to facilitate electronic manufacturing in a bonded warehouse in India. Because now many companies has large machineries required, tools, equipment, etc., and they want to increase production in India. Now, if that machinery tools are used in India, income can be imputed to the overseas entity. In order to remove that challenge and ambiguity, it is being provided that in case an overseas company, foreign company, brings here's capital goods, equipment, tools, etc., and a manufacturing is carried out here in India in a bonded warehouse, so no income will be imputed. Income arising on account of these use of capital goods, etc., will be not be taxable in India on this issue. There are certain benefits which the finance minister has announced, not part of the finance bill, but part of the budget speech, is regarding the safe harbor rule for the IT related industry. She had two things. One, that there were many issues that safe harbor rule applies to whom, because IT services are from related services, back office services, KPs, what we call what value added service, to what extent, all these will be considered as IT services, and the safe harbor rule will be 15.5%, and the threshold overall, which was the limit was there up to 300 crore rupees turnover, you can take the benefit, that is being increased to 2,000 crore rupees. And as per the statement given later on by the Honorable Finance Minister, she says more than 2,000 companies will get covered, and only I think 30-40 companies will be left out, which will not be covered in this safe harbor rules on that part also. Similarly, there is another safe harbor rule which is being put it out also in respect of the manufacturing also facility. There also they are saying data center services income will be on a safe harbor by 15%. IT is at 15.5, and in the case of a data center, it is a 15% income. Now that I can just convert and go to the now some TDS and TCS provision. You would have heard about the finance minister about TDS. One benefit was motor accident claim. Two things have been made. Interest has been exempted. Interest for delayed payment, etc., which motor accident claim in the case of individual which is received will not be taxable. Secondly, there will be no TDS deduction. Obviously, income is not taxable, then there will be no TDS on that part. Second part is the issue whether what we call this manpower supply. So there was issue whether manpower supply is liable for TDS. If it is liable, whether it is a technical service liable for 5%. Now it is being clarified. This is not this will be liable for TDS, but it will be at the rate of 1% or 2% depending upon the entity to whom it is being provided, who is providing. 2% in organized and unorganized 1%. So that's the idea on TDS. There is no other change on the TDS for foreign. TCS, yes, rationalization is being done. Major change is on the what we call on foreign remittances. As on date, on foreign remittances, there are three different category which is there. If you go to overseas tour, up to 7 lakh, 5%, and then 20%. Now across the board, it is 2% which is being worked out on the purpose. Similarly, if it is for a overseas education or medical, then it will be 2%. 0.5% continues in case for education. When you take a loan, it continues to be a 0.5% on that part on this issue. Similarly, now on the issue when we are rationalizing, so there were TCS on scrap, etc., which was 1%, which is being increased to 2%. I believe that's all part of the issue. Now, there are certain other reformatory changes giving relief and concession on that part only. One is to benefit to the individual HF on the part 15G, 15H form is required to be filed in case you do not want to get your tax deducted at source. To the deductor, you have to file. If I am holding share in, say, company TCS or Infosys, I need to file form 15G. If I am holding share in Reliance, I need to file separately. Now, the law says that instead of filing the form 15G and 15H, you can straight away file this form 15G, 15H with your depository. And single form will do all shareholding in that depository, because depository has a complete list of that period. And that form will help you out. Now that's ease. And depository in turn need to file this form, because who's the deductor is supposed to file with the competent authority. Earlier it was monthly, now it will be a quarterly filing on this issue. Another amendment is certificate of a lower deduction 197, where human interface was involved presently. You have to file an application, go to the TDS officer, convince him that you are eligible for nil or a lower deduction of a certificate 197, which we normally say. Now say in the case of individual HF, it will be only online filing. You just need to put the data there based on your statistical data of the earlier year and the current picture which you have projected. Certificate will be issued by automated process, 1% or nil per deduction, whatever is there. I believe this is a welcome move which has been done on that part, on the issue, on this part, on this part. When I'm talking of TDS, looking to the time constraint, I will just try to the prosecution also on the issue. TDS prosecution has been a bone of contention and painful process. Now, as on date, prosecution has been divided into four parts, only four parts. One is there, in case the delay is limited only to a due date of filing the quarterly statement, no prosecution. In case delay is of up to 10 lakh rupees, then only fine will be leviable. If the delay is of rupees 10 to 50 lakh rupees, then it can be simple imprisonment up to 6 months. And if it is more than 50 lakh, then it can be a simple imprisonment up to 2 years. So this is the nutshell of the prosecution provision which are there. And these provisions prosecutions are also being amended in respect of the other defaults also. There are other default where you have not cooperated, where you have concealed the income, etc. On all these part is being provided on the same line. 10 lakh, 10 to 50 lakh, and more than 50 lakh. Those are the category which have been made on that part of the prosecution on this part of the issue. These are the major changes which I think it has been made. Now I can switch over to 2-3 smaller provision because One is smaller provision for which may be relevant for salaried employees, that as on date, there is a provision that whatever the balance you are having in your PF account, at best 12% interest maximum can be given by the employer. Now, for that part, this 12% contribution can be made by the employer, and beyond that, it is taxable. Now, the finance bill says, having set a ceiling of 7,50,000 rupees overall, you may know that it is overall ceiling which employer can contribute 7,50,000 rupees in different fund. There is no need to have this 12% independent ceiling of contribution by the employer. So that 12% ceiling is being removed. As regard income from house property, presently under the new regime, there is a ceiling that you cannot claim a deduction of more than 2 lakh rupees on account of interest in a single year. Issue arose, what happened to the interest incurred in respect of during the construction period, which is gets spread over 5 years. So one of the interpretation was 2 lakh plus that interest will be available. Now this finance will settle down that issue. It says 2 lakh rupees include the interest during construction period. So you cannot get that deduction beyond 2 lakh, including the interest during construction period. Of course, you can spread it over a period of 5 years over the period. Now that brings me to the charitable trust and institution. My all along experience has been no finance bill can be complete unless it tinkers with some provision relating to charitable trust or institution, to whom we call NGOs. These are non-government organizations, which is not for profit organization. Fortunately, this time the amendment which are being proposed are to give concession to these NGOs only. One provision which is being amended is, which is I think correction which is being made. Section 139 mandate that a return is to be filed before that due date, and 139(4) gives you an options to file a belated return. This provision was missing in the new act in the case of a charitable trust. So now that provision is being amended and that correction is being applied, that charitable trust can also apply, file a return beyond the due date of filing, but before that for the issue on that part of it. Then another provision was, which is specified violation. We all know that in case a charitable trust violates any of the provision, it can lead to a cancellation of its registration. In order to address this issue, that cancellation should not happen in genuine cases or where the issue is of computation only, there are certain exclusions which have been provided where the violation will not be considered to be of a nature that it will lead to a cancellation of registration. And one of the issue was when during the year the receipts from a activity which does not fall within the meaning of the charitable purpose as defined under the old act of section 215 exceeds 20%. So on that basis, there was no exclusion. So now this finance bill has provided that in case there are receipts or income which do not fall within the meaning of charitable purpose, but which are otherwise incidental to the activity being carried on by the charitable trust institution, then the registration will not be cancelled. I believe these are the changes which have been made on that part. There are certain changes regarding the cooperative societies, where the cooperative societies have been given benefit of the same section ATM. Certain further activity, cattle feed, etc., has also been included as a part of the cooperative societies. And then multi-state level societies also been eligible to claim exemption for 3 years. These are the certain exemption, may not be relevant for a large number of the people who are here. So these are the major changes which have been proposed in the finance bill. I have tried to cover up all, I think, to the extent best possible, the changes which have been proposed in the direct taxes. Vinayji, I think we can just open the now discussions for, in case any question we can take up or any issue which are arising on that part. I've tried.
Yeah, definitely, sir. And at the outset, I mean, let me first thank you. I mean, for such a nice deliberation, close by close, and connecting the dots. I mean, this is something is a mesmerizing for all of us, and I mean, nothing has been missed out. However, like I said, just for the information of all the members and for you also, we have been benefited by the arrival of Satish Aggarwal also in between. And I thought I will not stop you in between because your deliberation was quite going with the flow. And I thought that there's no reason that I should.
My apology to Satish ji, because I was focused on the topic and being too long. So my mind was not working anywhere else other than just putting on the issues there, and I tried to cover it up. So, I said I will happy to hear Satish ji and also take questions in case other member have in the chat box, etc.
Sir, unmute. Satish, I'll request you please unmute yourself, sir, please. Yeah, please,
I
sir.
just want to add
Yes.
one point.
Yeah,
I-
please, sir.
Slightly late, that the exemption for the armed person who do not retire because of disability has been withdrawn. That means if somebody retires from armed forces or because of disability, at that point, then pension is exempt. Otherwise, suppose somebody has fought, lost his leg, and then he still continues in the army, then the benefit of exemption of pension is proposed to be withdrawn. And second thing, I think I have listened to, but I was slightly late, was a change in the procedure prescribed for deduction of tax at source from purchase of property from a non-resident. At present, the PAN number is required to be obtained in case the property is purchased from a non-resident, which was cumbersome and which people face difficulty because they don't require the PAN number for just one transaction. They had to take the PAN number and then they had to surrender that also. Now that also they say can be PAN based. So I think it was a very wonderful deliberation with all the examples and all working. Jansa must have not slept for 2-3 days, and I didn't want to add anything more. Everything was fine, and whatever questions are there, I will also be benefited and will take it. And thanks for the invitation. And now over to you for the deliberations. And the
Thank you very much, sir.
Vinay ji, you can read out one by one questions, then I can answer it.
Yeah, definitely, sir. I mean, I'll go through with this, and friends who's in person who want to raise the query can raise their hands so that I can look into my participants, like, and I can give turn by turn number. But however, at the start with, I'll just first look into the chat box only, and since we have been benefited by the presence of Ved Jain ji and Satish Aggarwal ji both. So the question session is open, and if any clarification doesn't come to the member who raised this query in specific, I'll request the member to intervene in between to get a clarification of the answer he is looking for. So to start with, friends, I'll just start the a question answer session, which is there in the chat box. And the first question is, it is by Mr. Surana, Samarthmal Surana. Samarthi is asking, sir, whether the other capital loss will be adjusted against the capital gain out of the buyback transaction, whether there will be any immunity from the penalty against. Sorry, just I'm completing. Just a second. Yeah. Sir, sorry. Let's take it this way. Whether there will be any immunity from the penalty against.
I can read it out. Whether there can be
Against
reporting a reason from misreporting.
Underreporting a reason from misreporting with respect to unexplained credit, etc.
Samarthi, there I can see him here on Samarthi. Capital, see, once it is considered to be a capital gain, so there is no restrictions of not being allowed to against any loss. So in case there is an eligible capital gain loss, so that will be available, because once the transaction is not being considered as a dividend and it is being considered as a capital gain, then obviously it will be eligible. And to that extent, to that extent, even if you have bought the share at a value and the buyback rate is lower, then you will be eligible for that loss also. So there is a possibility that you have bought the share earlier and now the share have come down, but buyback is being offered, so you may be there. As regard the second question, whether there will be any immunity from penalty against, yes, there is immunity which I explained, but the only condition is that instead of 100% in misreporting, now it will be 120% in case of the transaction like unexplained credit, etc.
So next question, I suppose Smartji, I suppose that's point is that no additional supplementary question from your side. The next question is the Gulshan Gulati ji. What about the penalty after tax rate is reduced from 60 to 30%?
See, the question is now rate is 30% with two conditions that no adjustment will be allowed to against set off against any other income loss. Secondly, rate will be 30% even if it is applicable 10, 20, 30, whatever it is for your case. But penalty will be misreporting because in case unexplained credit will not be underreporting. So 200% penalty is leviable in the normal course. But if you want to settle it out in 270AA, then you pay 120%. So this will be at par with any other income. So in case you have a unreported income, which is not of 68, 69 other nature, and allegation is that it is a misreporting, then obviously you have claimed an expenditure which is bogus. So then obviously it will be the same. So it doesn't make any difference. That penalty will be 200%.
Just for the clarification of the members, if the question raised is that now misreporting and underreporting are at par now with the amendment proposed.
No. Underreporting is still continuing with there. Penalty for underreporting is 50%. What is being done is in 270A subsection 9, one more clause is being added only for unexplained credit, cash credit, where 120% for immunity is being provided. This does not mean that in case of inadvertent error or something other issues arising where you can say legitimately there can be two views or something like this, capital versus revenue, those will be considered as underreporting. It is only when you fall in 270A9 there where the category has been specified, only then it will be misreported.
Enough. I suppose, Gladys, this is I suppose you must have received the right answer. So, I mean, Stacey, I mean, I'll also request you kindly, you can also equally intervene in between, like, and because we need your input also on many of the questions.
Absolutely. Thank you. If
So
required, I will definitely.
Definitely, sir. I mean, basically it is given a clarification to the member is the uppermost part of this meeting.
Right.
The next question is from Shivam Gakhar. It is there any grandfathering is allowed in SGB case, like sir, proposed SGB change? I mean, SGB, there is a change. Stacey, you
SGB.
know that now the
Sovereign
SGB purchase from the secondary market is subject to capital gain tax. Now,
that's
the
right.
question
I have already clarified that anybody who buys from the secondary market will not be entitled to capital gains exemption. So that is as simple. There is no question of grandfathering.
Fair enough, sir. So, Gakhar Sahab, I suppose this is the right way. Since this is it doesn't fall under the capital gain, so there is no question of grandfathering. Grandfathering is once you should enter into the capital gain chapter first. Now, Ajay Jain is asking the question.
I may add, Vinaji.
Yeah, please, sir.
Shivam's question is grandfathering is normally done that in case till date you have done something that will not be covered. So that is not available as it was in the case of a listed share. When Arun Jaitley ji imposed tax of 10% on listed share, capital gain, he has said grandfather, whatever is the value as on today, that will get frozen, on that we will not take a tax. So his idea is today's value, please grandfathering is, so there is no benefit of grandfather.
Even grandfathering in Tiger was not valid. In the Supreme Court judgment, the Supreme Court distinguished that grandfathering. So let us not be too fond of grandfathering.
So now we should look for great grandfathering now. Anyway, Ajay Jainji is the question is if we have brought forward business losses but no business income in the current year, what will be the due date of ITR?
Yeah,
They're
ITR
asking
due date.
that if there is a brought forward losses, business losses, and in current year there is no business income. So then what will be the due date of ITR?
I think we must compliment this Ajay ji for raising this type of question first. माइंड कितना फर्टाइल है सीए का ये पता लग जाता है कि कहता बिजनेस लॉस तो है करंट ईयर नहीं है बट आई एम ऑफ द व्यू this person will be required to file ITR 3 not ITR 1 and 2 so
Yes,
definitely it should be 31st August but still I think it is a good question difficult to answer.
No, it is 31st August because you have to give the brought forward loss under the head business and profession only.
Still, sir, I mean, just for my my understanding, even if the return is filed late, for example, due date in any case is 31st August, unaudited. But if you even still file late return, I suppose the brought
Yes,
forward
there is
carry
no
forward
difference.
is
There
still
is
allowed.
no
That
difference.
doesn't impact. Am I right, sir? TG,
So I can't hear it. What you said?
मैं ये कह रहा था, my point of saying is कि in case there is a brought forward losses and
Okay.
current year there is no income, then even if the return is filed late from the due date, still that the benefit of the brought forward losses still be there.
Yes, that's right.
सर पेनल्टी का इशू आ सकता है
Why the penalty issue?
सर अगर लेट रिटर्न है तो 5,000 की पेनल्टी लगेगी ना अगर रिटर्न लेट
Fees
Penalty
है,
नहीं,
penalty
additional
नहीं है।
fees है वो.
वो fees है, that is not penalty. चलो anyway next चलो
Anyway, next. So then again, the Shivam is asking another question. Will this new updated return be filed under section 148 or 139(8)(a)?
क्या क्वेश्चन है
सर क्या है कि जैसे अब नया रिजीम के अंदर
we filed under section no see in case before issue of 148 notice you do voluntarily then you will file in 139(8)(a). Right. And
Correct.
in case after receipt of 148 notice, you are not supposed to file the return of what we call 148 because the law has clearly provided that whatever you will be filing in response to 148 notice, that will be an updated return, and then you are prohibited from filing another return under section 148. So whatever there will be two window options open to you. 140 in case you have received 148, you just reply to that within 3 months with the time given, we file the returns, all right. Or you say no, I want to buy peace and just pay taxes, whatever is the allegation coming to me. Then you file an updated return in response to 148. Then you are prohibited from filing 148. There will be no two returns, one return only.
Sir,
and you have an option of even partially agreeing. You have an option of partially agreeing. The assessing officer may say that your income escaped 10 lakh rupees, but you say 3 lakh, not 10 lakh. Maybe some sales you have made. Assessing officer turn entire sales as income. You want no 5% profit should be added. So you can declare that 5% and then contest the balance.
There is supplementary question.
अगर 148 के नोटिस के बाद
Ankit, just hold on. The question point out there is the supplementary question comes is in case the 148 is received beyond because the 139(8)(a) can be up to maximum 4 years. And if the 148 is received beyond the period of 4 years, then what the status will be?
Then you have obviously no option. Then you obviously have no option. I mean, that's an anomaly because you are opening a window, allowing updated return, and you have right to reopen up to 5 years, but updated return right is up to 4 years. So in all fairness and to be logical, that updated return should be allowed up to 5 years. But they are not doing
amendment.
So Shivam Kakkar is very active on this question answer session, sir. So third question from him again. So
but
let's
sir,
take him
148 वाले में एक doubt अभी भी है. When the 148 notice comes, we file a return against the 148 notice as per the current existing provisions. In some cases, we declare income also, which is the information based income जो डिपार्टमेंट ने करी होती है वो हम 148 की रिटर्न में ही डिक्लेयर करके फाइल कर देते हैं जहां पे हमें सरेंडर करना होता है. In that return, we do not pay the 60% additional tax that is levied under one ITRU. So why would we opt for ITRU?
I can answer it. Let me answer it. Sir, option is with you. You are being issued a 148 notice. You can file an ordinary return, including the income, by paying the normal tax without paying the additional tax. But then you are exposed to misreporting 200% penalty.
Penalty.
सर अगर मैंने वो income
Because the law says when you are filing a return in response to 148 as an updated return, you have to upfront pay additional 10% also. So it is a window given to you to buy peace and to avoid litigation on behalf of the department. So that's why I have shown you an arithmetic showing that which way you will like to take the stand. The arithmetic says show. If you file a return in response to 148, include certain income, it will be an admission that your return earlier was wrong. Then your penalty is as good as confirmed unless you are come out with certain very good explanation.
But sir, one can
and
always
then you are exposing yourself to prosecution also.
But sir, one can always opt for penalty immunity if he has already declared the income in 148 return. Now the penalty provision is also expanded to misreporting of income, so they can always apply for immunity and get it.
So then you can pay 100% tax penalty there for 270 AA.
Sir, 100% tax I'm already paying when I file the 148 return.
No, sir. Don't assume that much.
Paying tax, Ankit, does not give you an immunity from the penalty.
Sir, if I pay the tax within 30 days of the order and when I have included the income in my 148 return, then there will be no variance. If theoretically अगर मैंने वो information को सही analyze करा, मैंने उसको 148 की return में ही declare कर दिया.
Sir, the answer is very simple. ये दिल बहुत मांगता है लेकिन सरकार नहीं मानती अपनी बात. अगर ऐसा हो जाएगा, if I agree with your this interpretation, then there should not be no penalty in all those cases where people include the income in the 148 return.
Correct.
Sir, under reporting में तो नहीं होती थी. In my cases also, whenever donation वाला case जो था, we always filed.
That was a special case. The government was too liberal because government wanted to get out of that issue. Don't compare that. As I said, unless you bring your case in a special circumstances, that penalty is not leviable. But you will not be able to get immunity by not paying taxes, by not paying penalty.
Point is
Please
this
forgive
point.
me.
Anyway,
Please forgive me, sir. I think, sir,
may I know who's there?
समर्थ सुराना सर.
हाँ, सुराना जी बोलिए.
सर जरा माफ कीजिएगा, मैं थोड़ा गलती पर हूँ. मैं अभी तक यही समझता था कि पेनल्टी तब लगेगी जब पहले अंडर रिपोर्टिंग होगी. अगर अर्थमेटिकल इक्वेशन बराबर हो गई कि इनकम रिपोर्टेड बाय एसएससी और इनकम असेस्ड बाय असेसिंग ऑफिसर इज इक्वल, तो पेनल्टी कैसे लगेगी, ये मेरे को थोड़ा सा डाउट है सर. प्लीज.
ऐसा है कि if you are able to read, अगर आप ऑफिस में बैठे हैं, if I will suggest that you can open 270A. ये मेरे सामने किताब है, उसमें पढ़ लीजिए. Have you the book before you?
So friends, now the class has started.
ठीक है सर.
हाँ sir, 270 capital A.
नहीं, Vinay ji, looking to time constraint, we can move forward. My only suggestion is this issue is very well covered in 270A. Because the logic clearly says if we accept his explanation, then in every case of a reassessment, you just declare the income in the tax return and pay the tax and say, no sir, now you have an immunity. Anyhow, we move forward. They explicitly covered in 270A.
270A subsection 2 clause A sir.
Clause A में बहुत covered, clear covered.
Fair enough, sir. Now the question is another Shivam query is the point is if the return is filed against the notice under section 148 as a 148 return, can that return also be filed again as an updated return?
No, sir. No. See, you get one opportunity. Updated return, there is a one condition. Once you have filed an updated return, you cannot file another updated.
The question is, sir, why this question comes is now the earlier returns, now the proceeding is on. Return is already been filed under section 148. This new clause benefit will not be available to those returns which were filed earlier under section 148.
I could not get you. What is that?
See, if the return already been filed under section 148 and the proceeding is still on, With this new benefit being available for ITRU updated return, will that not be available for the filed return under section 148?
Vinayji, just try to understand the scheme. 139(8)(a) is very clear that once the proceedings are on, that you are prohibited from filing a updated return. One thing is clear. Now, only exclusion now has been provided is that in case you receive a 148 notice, and when a 148 notice can be received when no proceedings are pending.
True.
It means nothing is pending. Now you have an option, two routes. Either you comply with 148 notice, you file your return on the ordinary course as we have been filing. Whatever you want to do, in that case you can do. Another option is you file an updated return. And in that return, you can include certain income, pay the taxes as per the scheme which is there, 25, 50, 60, 70 plus 10%. That's all. And the last is, whatever now you will declare, to that extent, we will give you an immunity. So you have declared original income 10 lakh rupees. AO's allegation is 6 lakh rupees. You have included only 2 lakh rupees. So 12 lakh, up to 12 lakh rupees, you have an immunity. 4 lakh rupees, you will get exposed. Assessing officer may agree with you, 4 lakh rupees, no addition is required, or he may agree 3 lakh rupees addition is required. He will initiate penalty. Penalty can be for underreporting or a misreporting. We do not know what is the allegation coming out. It is underreporting or a misreporting. If it is misreporting, he will levy 200% penalty. If it is underreporting, he will levy 50% penalty. Now you will have another opportunity on that basis that you want to buy peace and you get out of it. So 270 AA, you pay whatever is the tax is due thereon, and you pay underreporting, no tax is required to be paid, further penalty is required to be paid. Misreporting, you pay 100% of tax. But if misreporting is 68, 69, you pay 120%. So this is a scheme.
Fair enough, sir.
Stacey, I believe that's the right, I think, answer, na?
Anyway, now the question, the Gulshan Gulati is asking that is the 147A override scheme of faceless assessment? I think it is not overriding. It is a question is bringing his parity with the normal assessment, normal notice and assessment.
147 override only issue of 148 notice.
Fair enough, sir.
So
Now
my
the Naveen
question
Goyal.
here is, sir, I wanted to say one thing. Now, after this controversy of Java is over by bringing 147A, now, suppose, what would happen with the scheme of faceless assessment which was brought by the income tax a few years back? Now, who will issue us the 148 notice? Whether it
Either
will
way.
be Java, who will issue, and what would happen to the, because there is
Either
no
way.
change in
Both have got the
in
jurisdiction.
any section in the scheme.
Either way.
Both have got the jurisdiction.
Delhi High Court applicable हो गया ना?
I can read out what is 147A. Notwithstanding anything contained any judgment, order, decree, or any court or section 151A, or in any scheme framed thereunder, for the removal of doubt, hereby clarified that the assessing officer, for the purpose of section 148 and 148A, shall mean and shall always be deemed to have meant to be an assessing officer other than the National Faceless Assessment Center or any assessment unit referred to in subsection 3 of section 40.
So it means all those cases which were, quashed by the Delhi High Court and other high courts, they were again be reopened by the department.
Naturally.
Now they can be.
Delhi High Court is already against. Delhi High Court ने तो क्वेश्चन नहीं किया था ना. Delhi High Court तो इस इश्यू पे already against है.
नहीं, वो पेंडिंग चल रहा था सुप्रीम कोर्ट में.
ना दिल्ली में किसी का स्टे 151A पे कोई पुरानी अपील पेंडिंग वैसे पड़ा हो तो अलग बात है. बट दिल्ली हाई कोर्ट जस्टिस यशवंत वर्मा, I think 1.5 year, 2 year back, 1.5 year, July 2024, he had delivered this judgment.
The next question.
Punjab High Court, Bombay High Court, they were in favor. There are other High Court, but Punjab High Court was, Delhi High Court was against on this.
And Rajasthan is in favor.
Fine. Let's put more question in the line because we have number of question in line and we need to reply maximum. How about monthly pension from annuity from LIC? Is it taxable? Is asking Naveen Goyal.
सतीश जी जवाब देंगे इसका तो भैया मेड से।
क्या
सतीश
सवाल
जी,
है?
LIC एन्युटी जो है क्या वो टैक्सेबल है? दिस इज व्हाट द क्वेश्चन इज।
हाँ बिल्कुल टैक्सेबल है।
वो तो पहले ही टैक्सेबल थी भाई।
उसमें क्या रह गया? कोई एग्जाम्पशन थोड़ी है।
सुराना जी फिर से क्वेश्चन कर रहे हैं सर, इफ द पेनल्टी ऑर्डर इज पार्ट ऑफ असेसमेंट, हाउ द इम्यूनिटी मैकेनिज्म विल वर्क आउट?
क्या क्या दोबारा बोलो, क्लियर नहीं हुआ।
If the penalty order, now as per the new scheme, penalty order will be part of the assessment order, sir.
127 से आएगा, फर्स्ट अप्रैल 27 के बाद, एक साल तो यही
Obviously,
चलेगा।
obviously. Now he said कि if that is the case, then how the immunity mechanism will work out? जब उसमें पेनल्टी लेवी हो गई है।
Vinay ji, there will be two demand notice issued, one for the tax assessment and one will be for the penalty. And 270AA says demand notice as per the assessment order which have been issued, you pay the tax at January and penalty automatically will get waived off. And
Sunal ji, I suppose it's clear. Now the next question is MAT in old regime. If a company chooses to continue in old regime for its own reasons, can the MAT credit balance be carried forward to be availed when it switches over to the new regime?
I believe I specifically answered this question.
Yes, sir.
Clearly. That's why I showed the slide. Normally, I don't use the slide. This time, I have used 3-4 slides only to bring home the point intricacy that it gives you an option. It is not necessary that you need to switch over from 1st April 26 only, on or after. So your balance is getting frozen on 31st March 26. It will not increase. It will not decrease unless you use it. Only from the year onward, when you switch it over, you will be able to avail it.
And further to this, just for the, without getting a permission from sir, if sir shares, if that permits sir within your own office, if you can share all this, because you haven't, we have been benefited by your this publication of budget. If that is available, if you can make it available on soft copy to me, we can share it on the group also. So that
we are in the process of writing this book. I think maybe next 3-4 days we will be able to share everything. And
thank you, sir. Now the next question is that 10% pre-deposit condition in income tax is mandatory for filing appeal like GST or only required to stay recovery proceeding. What is this? No, this is in relation to GST, I suppose.
There is no condition in income tax. I think this question is that condition on income tax. There is no such condition. Only thing is that you will be assessing default. Your bank account attachment can happen, but there is no such condition that for filing an appeal you need to deposit 10%.
The next question is from Safia. Is whether non-recognition of a school run by a society can be a valid ground for rejection of registration under Section 12A of the Income Tax Act in the light of judicial proceedings, judicial precedents. Does non-recognition of a school impact the eligibility of a society for registration under Section 12A of the Income Tax Act? Stiji?
Yes, there was a Supreme Court judgment where the case, I forget the name, where the case was of a Andhra Pradesh charitable requirement of the state government. Since it was not registered, now as far as this question is concerned, if there is no requirement for a school to function as a charity, there is no requirement for registration, compulsory requirement, then I don't think there is any problem. But if there is a requirement, then charitable status cannot be given. I think Jain Sahab can confirm that.
I see, Satish, you are referring to Noble Education Society judgment.
Noble, yes.
That was a Supreme Court judgment. But issue is that was the state law mandating that every NGO required to be registered. And in case NGO does not get registered, then there was considered to be a violation of the state law. And then because the 12A says that in case you have not complied with the law applicable to you. But here I am posing a question that you are not recognized school. So recognition of a school is not a state requirement because for primary school, middle school, there is no need to have a recognition. So in so many villages, townships, so many schools are being run by NGOs which are not recognized. fifth
Right,
class,
right.
eighth class, that's okay. So that should not be only ground for unless there is an allegation against you of doing something wrong. On that basis, your recognition has been given, then the issue will be different.
Maybe that is what I
Fair
said.
enough. I'll request the
Minimum
members to
requirement.
please mute, or I said I'll request the organizer to please, mute if there is any query. Now the question is that Ashwini Ralanji, this query in any case, this is up to the department. The question is ki, if the Zhao case been decided in favor of SSC by various high courts, what the fate of those will be, this is up to the department. Department is all free to reopen those cases again, sir. Am I right, sir?
Yes.
Thank you, sir. Now the question is from the Tarun. Tarun is asking now budget is a non-budget query, but budget is budget in any case. If a taxpayer has filed Form 10 ID after the due date of AY 2021, whether benefit will be available for subsequent year or not, Section 115 BAB.
I think he should check it up because there was some concession allowed by the board circular. And there are few judgments of the court. They say this filing of form is not mandatory. It is only recommendatory. Something can be done, but difficulty will be there, of course.
Then Umesh Goenka there's a query in case buyback of share. If purchase is made before 31st January 18, whether fair market value of 31st January 18 applicable.
His question is that whether grandfathering provision will be applicable
Obviously.
while computing capital gain in case of buyback share. Answer is yes. Obviously, capital gain has to be computed in accordance with law. Only thing is now buyback in the hand of a non-promoter will be considered to be the consideration received for sale of share. So whatever is the provision applicable will be applicable. So grandfathering benefit will be available. No issue.
Mahesh Bansali is asking, is there any timing for updated return is reference of 148 notice? Is it available if proceeding enter at last stage with the show cause notice? Yes, definitely. Why not?
No, sir. It is available. Updated return will be available only within the time period allowed to file the return. Now, under the amended law 148, you cannot file a return beyond the time given by the assessing officer, which cannot be beyond 3 months. So in case, now the law mandate that in case you have not filed the return, you are disabled to file the return.
So I stand corrected. So Maheshji, it is for you. So next query is ESOP shares, Indian company employer given of US parent company, not shown if in FA schedule. Cost 3.25 crores. Shares sold due to demerger at loss. Transaction of FY 1920 not shown in ITR and FA schedule. Sale price 3.10 crore. Dividend on US demat shares was received in FY 17-18. Tax is not paid in ITR on dividend, but tax paid with interest. Lot of query with interest in December 25 voluntarily and informed to AO through mail. Can immunities available as per 26 FA schedule budget provision further 60% tax minus December 25 tax paid is equal to be paid. Thanks, SK Arora. SK Arora ji, ye thoda sa ticklish, I don't know. I mean, I suppose if the panelist has understood the question.
विनय जी, दो क्वेश्चन है, थोड़ा सा आपने ठीक कहा. This is a lengthy question. In case 3.25 crore is the amount when he was a resident, then obviously he is not eligible for the immunity. But in case 3.25 crore shares were received when he was non-resident and not taxable in India, that amount, further amount looks to be within 1 crore, then he may be eligible. Subject to that, his assessment have not been completed by the assessing.
So friends, I suppose this is something very, very technical question and you should go one-on-one to get the answer, right answer to this question. This is what my understanding says. Next question is Dr. C.A. Pradeep Goyal Barnala. If SSC files updated return in response to notice under section 148, whether 148 proceeding will be vacated thereafter or it will be continued, kindly clarify.
It will be continued. Only thing is, once you have filed the return and updated return, the assessing officer take into consideration. If that meets the criteria, then obviously he will pass the assessment order accepting that return, because it is a return, it is not an assessment. Updated return is a return, it is not an assessment.
So friends, my point is my understanding says even the 148 matter you had already offered for tax. While proceeding, there could be more things which might come up, and then you'll be subject to more things. See, the next question is that, sir, what is the fate of the matter pending in Supreme Court for 36 VA and Jai versus Fau? 36 VA जो सुप्रीम कोर्ट में पुराना, ये तो प्रोस्पेक्टिव है सर, ये तो 36 VA वाला जो है रेट्रोस्पेक्टिव थोड़ी ना है, ये तो प्रोस्पेक्टिव है। रेट्रोस्पेक्टिव का सुप्रीम कोर्ट जो डिसाइड करेगा, और जाऊ फाव वाला जो है वो क्लैरिफिकेटरी आया ही है, इट इज कंसीडर्ड, इट इज सेटल्ड इशू।
मानव जी के पास वेस्ट दिल्ली वर्ल्ड में 20 शेयर 0.20%।
So next, I suppose we are at the last that question. Late fee for tax audit report applicable from which year? Late fees तो पहले
late fee 26-27 26-27 because ये amendment income tax act 2025 में की है. There is no amendment in the income tax act 1961.
I suppose we have last question and then one more question, sir. I mean, two question in hand, and then there is some raised hands, 3 for those, and then we'll be looking into last question is a trust is running a secondary school affiliation is in the name of society as under Haryana LAE only society is allowed. Allowed affiliation as per MOA of society, it will be work as a branch if trust, I don't know, can 12 registration denied? मेरे को तो क्वेश्चन नहीं समझ में आया क्या कहना चाह रहे हैं ये. I suppose the member can Umesh ji, I mean, I suppose you should ask your question to yourself if you are there. Please unmute yourself, sir.
Yes, Umesh ji, you have raised the hand, ना?
उमेश, आपने हैंड रेज भी किया हुआ, अनम्यूट करो भाई, अनम्यूट करके अनम्यूट कर लो. अनम्यूट नहीं हो रहा आप. हाँ, अब बोलिए.
Sir, there is a charitable trust who is running a school, higher secondary school. At the time of affiliation, the Haryana government said that only society can be get affiliation as per their law. So they made a memorandum that this society, we made a society in Haryana, and as per MOA, this society will work as a branch of the trust, and it is running. So is there any problem? A branch of the trust.
अच्छा.
All working is in the name of the trust. Even PF is in the name of trust. We are receiving fees in name of trust, but affiliation is in the name of the society.
आप ये कह रहे हैं कि सारा कुछ अकाउंटिंग तो सारी ट्रस्ट में हो रही है, सोसाइटी खाली रजिस्ट्रेशन के लिए है.
सिर्फ अफिलिएशन का जो सर्टिफिकेट है वो सोसाइटी के नाम से है.
हाउ इट इज फंक्शनिंग देन? काम तो ट्रस्ट में हो रहा है ना, फिर तो
सारा ट्रस्ट में काम होता है.
तो सोसाइटी तो फुल नेम से हुई ना फिर तो.
नेम से
सर दे रहे हैं.
सतीश जी अनम्यूट सर, अनम्यूट. हुआ नहीं है सर अनम्यूट नहीं हुआ आपका.
सतीश जी आपको अनम्यूट नहीं कर पाया आपने.
अनम्यूट नहीं हुआ सर आपका. हाँ सर, हाँ प्लीज नाउ प्लीज.
सोसाइटी जो है वो स्कूल चला सकती है. सोसाइटी का पैन के ऊपर रिटर्न फाइल कर रहे हैं, ट्रस्ट के पैन पे कर रहे हैं, या दो अलग पैन ले रखे हैं?
सर हर चीज मैं ट्रस्ट पे कर रहा हूँ. सोसाइटी में
सोसाइटी का अलग है या ट्रस्ट का अलग है?
पैन सर मुझे आइडिया नहीं है. सोसाइटी का अलग ही होगा, पैन तो अलग होगा.
नहीं अलग होगा तो
सारा काम जो है ट्रस्ट में हो रहा है.
तो फिर तो ट्रस्टी रिकॉग्नाइज्ड है ना. फिर सोसाइटी की आप बैलेंस शीट, प्रॉफिट एंड लॉस अकाउंट बनाए तो उसमें कंसोलिडेशन
बना रहा सर मैं.
ऐसे बहुत स्कूल चल रहे हैं
सर.
कंसोलिडेशन होती है तो फिर अलाउड है.
मैं माय क्वेश्चन इज कि
मैं आंसर कर देता हूँ. एक मिनट छोटा सा
गोयनका जी, एक मिनट.
देखिए क्या है, ट्रस्ट आपकी स्पॉन्सर है, सोसाइटी स्कूल चला रही है, दोनों अलग माने जाएंगे. और ये थोड़ा सा चैलेंज है. दिल्ली में भी बहुत सारे स्कूलों के साथ, कॉलेज के साथ ये चैलेंज बना हुआ है. ट्रस्ट स्पॉन्सर होती है सिर्फ, और और उसको हालांकि आप ट्रस्ट में कर सकते हैं, लेकिन ये आपको एक चैलेंज आएगा। ये कॉम्प्लेक्स मॉडल है बिकॉज ऑफ एजुकेशन लॉ।
साहब
एक मिनट
हेलो
जी।
सर
चावला जी बोलिए।
सर मेरा सवाल एक है कि मेरे को ट्रस्ट में
एक मिनट
12 में 18 में तो प्रॉब्लम नहीं आएगी, क्योंकि अभी वो रिन्यूअल चल रहा है ना, अदरवाइज तो 7 से 15 साल चल ही रही है।
सर उसमें काम तो प्रैक्टिकली तो नहीं हो रहा।
इसमें ट्रस्ट में काम हो ही रहा है ना सर।
सर
सर
ट्रस्ट का
जान
फिर
साहब के ऑफिस जाके पूछना
आई एम
यार,
नॉट
ये
कंसर्न
कॉम्प्लिकेटेड
विद
मैटर है।
सोसाइटी, आई एम नॉट कंसर्न विद सोसाइटी, सोसाइटी में तो मेरे को इनकम है ही नहीं।
भाई फिर कैसे
सवाल क्या
दें?
है?
ऐसा करो गोयनका जी, ये तो चावला जी जो कह रहे हैं ना वैसे ही करना पड़ेगा। एक बार 1-on-1 कर लो आप तो ठीक रहेगा।
जान साहब के ऑफिस जाके समझना जाके, ये कॉम्प्लिकेटेड काम है। जान साहब नमस्ते।
नमस्ते सर। नमस्ते सर।
ठीक है सर।
और एक तो आप फोन नहीं उठाते, ये ज्यादा बिजी हो ना।
अभी
तो समझ
अगर
नहीं आप कह रहे हो, फोन नहीं उठा
अब
रहे।
चावला जी
मुझे
इस
दादा जी
समय
आप
कोई
भी जाके वहां जाके ऑफिस में मिलो ना फिर। वो फोन
चावला
नहीं
जी
उठा रहे हैं, वो कहना यही चाह रहे हैं कि आप आओ वहां पे चाय पियो और मिलो।
अरे भाई, भगवान तुझे मैं खत लिखता पर तेरा पता मालूम नहीं। अब ये
एक
बॉन्डेड
हाँ चावला जी बोलिए। अनम्यूट करो, अनम्यूट
विनय जी
करो।
ये दो क्वेश्चन खत्म कर लीजिए नीचे वाले, देन वी गो टू द हाउस।
हाँ सर एक मिनट सर, मैं एक बार पहले आ, एक क्वेरी है अशोक भाटिया जी की कि सेक्शन 295 ब्लॉक असेसमेंट इन केस ऑफ अदर पर्सन, adverse material found for 1 year, 153C, notice for block period of 6 years, whether the amendment made under new act of 2025 will be available on outstanding cases also, will that be?
No, it will not be, sir. It prospective.
It is prospective, but it is not retrospective. So friends, एक 4 क्वेरी और आई हैं छोटी छोटी सी, इनको और ले लेते, 2 हैं, इनको और ले लेते हैं। Sir, Mohan Bansal, I had raised one question on taxability of OFs, whether treated as listed company,
Offer for
whether
sale है, off है offer for sale.
offer for sale, okay.
Sir, I had raised one question on taxability on offer for sale, whether treated as listed company or unlisted
company share.
Sir, for this purpose, there is a specific amendment in section 112A, and there is a board circular clarification on that part. I will suggest him to look into that aspect, and that in offer for sale also some STT is required to be paid, and then the benefit can be available.
The last query from the member side is from Sunil Suriji. It is the penalty for non-disclosure under foreign assets schedule of rupees 1 lakh is for each year or one time? It should be each year.
ये issue अभी clarity नहीं है, but apparently it looks like that it is for each year. We have tried to also look into this aspect, whether this 1 crore ceiling or 1 lakh penalty is per assessment year or not, but still it is not free from doubt. Let's hope for more clarification.
So with these friends, the query in the chat
भाई
box.
हमारी बात तो रह ही गई जान साहब।
नहीं, we are not conclude, हम बंद नहीं कर रहे, तो जो क्वेश्चन
अच्छा,
आएंगे
मैं क्या भाई, हम गरीब आदमी का कोई सुन ही नहीं रहा।
सुनाओ
वो पहले उनसे सुन लो भाई।
हाँ सर, चावला साहब बोलिए।
ये बॉन्डेड वेयर हाउस में प्रोडक्शन और इंपोर्ट ऑफ मशीन्स, ये कुछ बताया था आपने।
हाँ जी
ये क्या है?
Sir, the scheme is very clear that in case Samsung, Apple, or some other company intends to carry out electronic manufacturing in India, and they want their machinery, tools, and equipment should be used, they can send that capital goods, machinery, or equipment to India, and Indian manufacturer in a bonded warehouse where customer warehouse that machinery comes, he can produce goods and export goods. Now, since machinery is being used of the foreign company, there is always can be an issue that to that extent, whatever profit you are making from this, a part of the profit belong because of the use of that machinery. So now the law says that we are exempting it. So foreign company can send their machineries, their goods, tools, equipment, and Indian manufacturer or their counterpart subsidiary can manufacture the goods here. It will not be a sale. It will not be a transfer. It is only lending the machine for the purpose of manufacture.
It
And
is
we-
for
we-
electronic goods, or it can be applicable. It is applicable for others also. Say I manufacture cloth. I manufacture
Suppose Venice
something.
bill talks of the only for the purpose of
electronic goods.
It is only for then that factory will be regarded as bonded warehouse.
Bonded warehouse.
Because supposing my unit is elsewhere, custom वहां से
Bonded
दूर
warehouse
ले
तो हम
जाना पड़ेगा.
custom bonded warehouse करा के तो custom से कहीं भी करा सकते हैं ना. Bonded warehouse does not mean that it is only airport. Bonded warehouse, you go, you have an area, you get it marked and go to the custom people. They will put a person there and they will.
That your factory will be regarded as
bonded house.
ठीक है.
So friends, as far as the chat is concerned, query is over. The house is open. I suppose if any one-on-one, if anybody want to raise an query, it is most welcome. Or otherwise, we have to move on from here. Any person, is the house is open for all. Yes, sir. Please, Teji.
मेरी एक क्वेरी थी जो मेरे को समझ नहीं आई. मैंने कहा जैन साहब से पूछ लूं कि एक मैंने कोई न्यूज रिपोर्ट पढ़ी है, मेरे को एक्चुअली नजर नहीं आया कि वेयर द सीबीडीटी हैज सेड कि सर्कुलर्स विल बी इक्वली बाइंडिंग ऑन द एसएससी आल्सो. कोई ऐसी रिपोर्ट है?
No, sir. I read the press report today. There was an article today in the, I think you are referring to an article in the Economic Time today, where they say that the government now says that they, even the circular which presently court says binds the government CBDT but doesn't bind the SSC, but there is an amendment to this act on this issue. I believe this interpretation is flowing from section 292B and BA somewhere. But in my view, this is not the correct interpretation.
यही मैंने पूछा सर.
For the purpose of this deliberation, I have refrained from even analyzing and interpreting section 290BA, which challenges DIN with a reference to the DIN assessment order. It will be still subject to litigation and there can be multiple interpretations.
ठीक है, मतलब it is right now fluid. यही हो गया ना?
I do agree, but the question is, today's meeting was a larger meeting of a budget meeting with all people. So I just try to explain the legal position and what is the stand there, and not going into the controversy which may or likely may arise on the proposed amendments, which again opens up some, may open some discussion for interpretation.
तो टाइम्स ऑफ इंडिया में न्यूज आई थी जो सतीश जी कह रहे हैं ना?
I believe today it is in the newspaper. Right?
हाँ जी, हाँ जी.
So friends, any other query on budget in specific, then only we can take up this matter, or alternatively, we have to move on from here. If any specific, still we have 5 minutes and we can carry on for another 5-10 minutes. That's brief. If you have a question, alternatively, I'm really waiting for any of the question or
Sir, in case of this machinery issue, so still the P concept will not applicable on this bonded warehouse because P issue can be arise in this aspect also, sir.
I believe, see, the finance minister post-budget, there was a lot of interaction, press conference and a meeting. She has very clearly said the whole objective is to get rid of this issue of P. Because in case you have a capital goods here, so there can be an allegation that you have a permanent establishment, your tools are being used. So that's why she clarified in the interviews. Sometimes what happens is you have to get the spirit not from the act only or a proposed bill, what the finance minister's speech says, what she has clarified later on also. So in the budget, I believe I heard a press conference and she has clarified why this provision was brought in and what was the issue in their mind. So this, exactly what the question which you have asked, that permanent establishment, that was the issue in which was addressed on this issue.
Sir, today on this circular issue, but CCIT in Ludhiana was also saying this thing that the circulars have this amendment has been made with regard to circulars applicable binding to the SSCs.
Subhashi, Ludhiana.
I think we have already discussed this issue, no?
Yeah, yes. True. So as per nothing new. Manpreet ji, boliye, please.
Sir, in case of purchase of property by resident from a non-resident, so there is no requirement of getting a TDS numbers. But what about the rate of tax? It's the change in the rate of tax, or it's the same 15% or 12.5% or the overall sale consideration, or just on the capital gain?
See, for that purpose, I believe now I can explain the earlier question also, linking this also. See, when we were talking that the CBDT circular will be binding the assessee, it is with reference to TDS. If you look at the provision in this income tax bill, finance bill, see, they have specified the rate which will be applicable as against section 195 Income Tax Act, which says in the case of any person responsible for making payment, any payment chargeable to tax, they say that person making payment to non-resident will deduct tax according to following rate, and in any other case other. So meaning thereby, in the case of a payment to a non-resident, now you have no option but to deduct a tax at the rate which have been specified there. So there is no question of computing capital gain in the hands of non-resident while you are buying property from the non-resident. Now, my view is that this new bill doesn't give an option to you.
Fine, friends. I suppose we are over with
sir,
the queries.
Good evening, sir.
Azmani साहब.
जी सर.
सर.
My video is not working. सर मेरा ये बजट से अलग हटके है. काफ़ी सारे लोगों को H1B वीज़ा और लोगों को भी अपॉइंटमेंट नहीं मिली, तो उनका 6 महीने से ऊपर का स्टे रह गया इंडिया में. तो उनकी सब इनकम इंडिया में अब टैक्सेबल हो जाएगी ना, इफ दे हैव स्टेड फॉर मोर देन 182 डेज.
अजमानी साहब, कोई डाउट कहाँ से आ रहा है आपको?
नहीं, जस्ट रिकन्फर्म किया, क्योंकि वहां पे भी टैक्स लगेगा तो DTA में लेना पड़ेगा बस.
Law is law. Only thing is you have a section 119 where you can go and knock out the CBDT by this is the reason, give me some concession or leave whatever you want. But otherwise, law is law.
So friends, allow me to thanks my esteemed speaker at the outset, and for the outset, before I thanks my honorable speakers, I said that this was the in substitute to our monthly Friday meeting, first Friday meeting, and now no more another Friday meeting on 6th of February, otherwise been due, it will not be there. So this meeting was in substitute to February 6th, first Friday meeting, and being a budget month and budget special, this meeting being conducted quite nearer to the budget day itself, like. So we are over with this month meeting itself, like, and so no more meeting in February month. So next meeting, as far as the budget meeting, so next monthly meeting is concerned, it will be on 5th of March. 5th of March, first Friday, and we'll look forward to your participation. And today, I'm thanks honestly to my esteemed speakers, starting with C. Ashok Batra ji in absentia, and C. Ved Jain ji, past President IC, and eminent advocate, senior advocate in High Court and Supreme Court, and my dear friends, my senior in profession, C. Satish Aggarwal ji, for their deliberate and wonderful deliberation on the budget. I suppose it been threadbare, it was been discussed and with a lot of clarity. I suppose after this deliberation specifically, no more confusion must have been there. But in any case, subject to your reading on your interpretation, anytime you are most welcome to discuss anything in person also, and you can reach out to the eminent speaker, and we are always available with you for any of the clarification and getting clarification from you equally. I mean, we are receptive as well as we giving in deliberation and giving intellects to you, wisdom to you. With these words, friends.
This program was also being broadcast on the YouTube, and this will be available on the YouTube today. Today was simultaneously, it was available on the YouTube.
Sir, may I know the channel, sir, if that can be...
The link is available on my social media, I believe. That's an issue. I will share the link also.
So if you share the link, friends, with that link will be, because now that has been recorded, so we'll be sharing that link on the group also. So you can again and again, you can listen to that deliberation. If you have missed anything, yes, definitely. And if you even if you are not missed, many times clarification, many times you listen, more clarification you can get. So
लिंक ले लो, लिंक दे दो जान साहब का सब।
हाँ सर, वो भेज देंगे सर, आ जाएगा सब।
और जान साहब कमिश्नर बिना 3 से 4 कोई भी आ सकता है उनके पास। आप भी
हाँ
एक
सर,
टाइम
बिल्कुल
फिक्स
आ
रखो कि 1 घंटा मैं मिला करूंगा लोगों को। आप
बिल्कुल
अजीब हो
सब।
गए हो, गायब ही हो गए, पता नहीं कहाँ
चावला
चले गए।
साहब,
सुनो
तुम
चावला
गाड़ी
साहब, आप
भेजो।
ऑफिस का एक लिंक भेजो, मैं सबको शेयर करता हूँ ताकि आपके साथ बैठ के भी चाय पीने का वहां पे
नहीं
लाभ
इनका
मिलेगा।
ना
हाँ
ऐसा
फ्रेंड्स,
चावला
होना
साहब
चाहिए,
काम
बोलिए
में
मैं
बुलाओ।
अवेलेबल हूँ।
so
ये
friends,
क्या हुआ?
and above all, I am
भाई
really very
हमारा
thankful
बड़ा
to,
हो गया है तो मिले ही नहीं।
I'm really thankful to all my friends who has attended in large number. We had touched more than 300 this time participation, including the person who were there in YouTube. This was a big success and big efforts been put in by all of you, especially by Ved Jain ji and Satish Aggarwal ji. They had spread their message across in their own social media also. So friends, I'll request in our meeting, you can also share this link to other person also who can be benefited by the in wisdom of our eminent speakers anytime in any of the meeting. So friends, with these words, I'm really thankful